All right, guys. Today we have SoFi earnings. It's the busiest week we've had in a long, long, long time. All right, so let's get some music playing here. But yeah, we got SoFi earnings today. It's also the Fed rate hike week. Very busy week this week. We got Microsoft, Amazon, Apple earnings, Meta earnings, Google earnings, SoFi earnings this morning. We've got just a lot of stuff going on. SoFi earnings are expected this morning. They are expected at $0. Profit. On revenue of 574.3 mil. This data is supposed to, the earnings report is supposed to drop at 7 a.m. market time. There you go. What's up, Beach Bomb? All right, let me drink some coffee. Try to wake up a little bit. Let's get some music playing as well. We finally got a haircut, guys. It was time, man. I was procrastinating that for too long. Market looks good this morning, though. I mean, it's up. All right. All right, guys. So, all right, but yeah, you can see SoFi already gapped up a lot this morning. Just overnight, it's at 807s right now. Yeah, this week is very busy, earnings-wise. We got a lot of stuff. Today's kind of slow. The only big one we have is SoFi earnings. So we got SoFi, Royal Philips, Alliance, Bank of Marin. And that's basically it until this evening. We got Supermicro, Semiconductors, Cleveland Cliffs, Whirlpool, F5 Networks. Tomorrow's when the big boys start. Tomorrow morning we got Pfizer, GM, UPS, JetBlue, Marathon Petroleum, HCA, and a bunch of other ones, Polaris. Tomorrow evening's the big boys, AMD, Microsoft, Alphabet, Starbucks, EA, Match, Linden Club. Yeah, a lot of stuff tomorrow. It's to the point where I don't know which one to cover. And then Wednesday morning we got Boeing in the morning. In economic data, we got a ton of stuff too, man. It's just a really busy week. Like in economic data, it's busy every day except for today. So Tuesday, tomorrow, we've got the Case-Shiller, and then we've got the JOLTS report as well as CB consumer confidence. We got the JOLTS job report expectations or we don't know what the expected numbers are. We got 8.8 million for the previous one. And then Wednesday, we got the ADP non-farm employment change, the Fed rate hike decision, again, Boeing earnings and some other stuff. Thursday, we've got jobless claims, non-farm productivity, services, or S&P manufacturing, PMI, ISM. And then Friday, we have unemployment and non-farm payroll data. Just a very busy week. We got tons of big earnings. Will Tesla rebound today? I don't know. Tesla's up some, isn't it? Yeah, Tesla up to 185s. Doing a little bit better than it was. Still pretty red over the last week, though. Yeah, regarding Boeing earnings, I really don't know. I'm in Boeing right now, so maybe I'm biased to the upside for it. But I'm already green in Boeing, and so I could either take it off now, which is possible, or just let it work. My average price of Boeing is $206, and it's at $207. So we're green in Boeing. Microsoft all the way up to over $400. It's at 407s, almost 408s right now. Boeing again gapping up today. Amazon up to 160s. So we'll see. But a lot of this stuff's trying. You know, we're trying. What's up, Mike? What's up, Mo? Bro, did the 49ers really come back in the second half and win? I didn't even watch the second half, bro. Wow. And then the Ravens won, too. Man, nobody wants to watch the Chiefs in another Super Bowl, bro. Like, I get it, they want a star in Mahomes, and I'm sure the refs were super friendly. Man, I thought the Lions were gonna take that. Surprise. Well, it's both, Mo. You know, one equals the other. My reason for buying Boeing is because it dipped so heavily back in July and August of this year. And it dipped so heavily starting in December when the bad news came out that it's probably, like, percentage-wise, it's down enough. And so I'm just buying up a small amount of shares, and if it bounces, great. And if it doesn't bounce, I'm okay. It's not the end of the world. You know what I mean? That's why I'm buying Boeing, you know. And it's small, and to be fair, I've taken profit off of it already, you know. So... What's up, Beach Bum? All right, guys, what's up, Yair? Lucid, I think, is gonna... I mean, I think they're cool cars, but I think most of these up-and-coming EV brands are gonna fail. You know, so I think, yeah, SoFi earnings are scheduled to come out in about 25 minutes. We'll put a timer up. We'll call it 23.5 minutes. Yeah, so here's SoFi. Earnings season going to help consolidate markets. Yeah, it's an interesting time. Yeah, all good, Bernard. Yeah, I don't want anybody to buy anything. I'm certainly not telling anybody to buy anything. I'm not an investment professional. I'm not liable if you lose. I have no idea what I'm talking about. I'm certainly not telling anybody. We're going to do a poll live. Will SoFi have better than expected? Will SoFi come in better or worse than expected? All right, so there's the poll. Vote on the poll. Will SoFi have better or worse than expected? I'm thinking of trading oil futures for the first time with all the problems caused. Maybe. Again, slap that like button, hit that subscribe button. I appreciate it. Understood? Yeah, I mean, my big thing is I don't tell anybody to do anything. I just don't want anybody to copy me, and I really have no idea what anything's going to do. All right, guys. So SoFi at 807s here. You see Tesla at 185.50s. Is it time to buy Tesla is the question. I'm not going to tell you it is because I have no freaking idea whether it is or not. But let me know if you think it's time to buy Tesla. I've been trying to learn a lot of anaconda chokes lately, you know, as kind of like a play off of my guillotines in jiu-jitsu. All right, guys. Tesla's Junko apartment money somewhere else. Hey, what's up, Pawn? I think SoFi is going to smoke it. Yeah, I try to be honest, Bernard. It's always time to buy Tesla if you're looking years out. Where's Apple at? Where's the other stocks at this morning? Apple actually down significantly over the last day or so. Interesting. It's all the way down at 192s. I'm wondering if it's time to buy it up. I don't know. I'm going to wait. Microsoft all the way over 400s. Microsoft gapping up ahead of earnings pretty significantly here. Look at Microsoft. Microsoft all the way up at 407s. 407s. So big pop from Microsoft. Google sideways but slightly green. Amazon sideways but slightly green. What else? Snapchat's still sitting at 16s. Half jokingly, but also not really. Isn't it always a good time to buy Tesla? I mean, arguably it is. It just depends on your mentality of it, All right. Bro, I'm in long on Tesla. I mean, I'm in Tesla too long. But I'm down on my long position on Tesla. But it's a longer term position and it's small. All right, guys. Remember, we got SoFi earnings coming out soon this morning. SoFi earnings dropping pretty soon. All right, so which LSU hat should I go with this morning? Should I go with the white classic one? I think I'm gonna go with the white classic one. I went long at 180. Just got extra to add to it. Hey, good luck. Mo, any thoughts on SoFi? SoFi is an interesting company. It's a newer company. SoFi hasn't been around that long. You put up a weekly chart. SoFi IPO'd back in 2020, and so I think it's an interesting company. I think it's pretty adopted by a lot of tech, but it's also new, and so it's high risk, high reward. But it's interesting. SoFi currently at 807s. I wish it had a better long-term chart though, but it's not as bad as some of the other penny stocks you see. So it had its crazy big year in 2021, where it ended up flying up. It didn't hold most of the gains, but it also hasn't. It's been upward trending since last December. So for the last year, it's been upward trending. And so it's an interesting one. We'll see what they do with their earnings. If we look at the actual earnings graphs here for SoFi, like the EPS graph, the question is, they're expecting a break-even quarter, which is good relative to what they've had. You know what I mean? Like, if we look at this, they've been losing money for like the last few years. Same thing here. You can see they've been losing money. And so today they are expecting a break-even quarter. So they're not expecting to lose money for the first time since 2021. Which was the last time they were up those really inflated prices. And so this is expected at 0% EPS. So again, that's a good sign for them. That's a good sign. We'll see if they actually can accomplish that. But yeah, that's a good sign for SoFi. And again, vote on the poll. Let me know what you guys think. SoFi is a very volatile stock. Yeah, 100%. You think Jeff Wood likes this factory? I mean, I think he likes them for the sole reason that they make him money. I mean, but that's any business person. I mean, look, it's not in a business person's best interest to, you know what I mean? Like, it's hard to explain. It's not in their best interest to, never mind. I mean, I agree he would replace them with automation in a second, but anybody would. I mean, that's not really you can't really knock him for that, I think. Let me know right now, what do you think SoFi shows up as for EPS? Now, just remember, SoFi is like a new age lender. Yeah, so they're expecting 0%, or they're expecting $0 EPS. So that's actually good. It might not sound they're expecting to make no money, but they're also expecting to lose no money, which is a very positive thing. All right, guys. So, oh my gosh, dude. What a terrible, terrible clip, dude. All right, guys. SoFi. Still waiting here. They're supposed to drop at 7 o'clock. We don't know when they're going to drop. DraftKings should, on their upcoming earnings, they're on Prize Picks. When are DraftKings earnings? Did we stop playing poker? No, we still play poker. I don't have much time to do stuff. Like, I love poker. Like, I really do. I love poker. Like, I really do love poker. But, like, I just don't have that much time anymore, man. I got, like, jiu-jitsu takes up a lot of my time. So, you know, where I used to play poker, I probably train jiu-jitsu now a little bit more. I still love poker, though. I just don't have much time to play it anymore. Like, whenever I get free time, my wife wants to hang out with me, you know. Is what it is. So, like, if I got free time, my daughter is also almost 15, and so, like, she wants to hang out with me too, you know. So, like, I just don't have much time. I'm a dad, you know. I'm a husband, you know what I mean. I got other hobbies. I love jiu-jitsu, and I love poker. I just don't have as much time to play poker anymore. February 15th, got you. Do you think SoFi will say they are profitable? It's going to be close, James. I mean, they could say it. They're pretty close to it. They're expecting the flat, like zero. They're expecting completely neutral, which is good for them because they've been losing money for the past few years if you look at their EPS graph, right? So if you look at SoFi and their graph here, they've been losing money since, again, 2021, late 2021. So they've been losing money these 1, 2, 3, 4, 5, 6, 7 quarters in a row, almost 2 years in a row. They've been losing money. And so, yeah, I mean, I hope they do. I think it's possible. Now, in terms of revenue for SoFi, you know, we can take a look at this as well in terms of rev. You know, one of the things that makes me a little bit more optimistic regarding SoFi is this. Here's their revenue graph. And this is actually a really nice revenue graph. Like, they are making, like, look at this revenue graph. And so, again, like, one of the reasons I think SoFi is interesting is this. Look at this revenue graph. That's impressive. You know, so this thing has had consecutively more profitable quarters, or consecutively higher revenue quarters than the last, over and over and over again. That's a really nice revenue graph, in my opinion. That's really solid, you know. We'll see if it looks like this, but that's a pretty nice revenue graph. And so, again, I think, so to understand the nuance of all this stuff, right? We got 9 minutes to understand the nuance of all this stuff, okay? Number one is that EPS is a gauge on profitability. EPS is margins. It's how profitable the company is. Is the company making money per share? Is it not? Margins related. That's EPS, right? And EPS, SoFi is expecting flat, 0%. Revenue is their ceiling, I guess is the easiest way to put it. Like, revenue is how much money they're actually bringing in. And so each can play off the other one. Like how much revenue a company brings in obviously can dictate whether they're profitable or not. And higher revenue is almost always better. And again, they are consistently showing higher revenue, good growth quarter to quarter for SoFi. And so again, I think their revenue is certainly more optimistic looking than their EPS, but their EPS is getting there. And again, if they could be profitable this quarter, they could. Again, we'll see. See what their guidance looks like. Yeah, Nvidia's up today. Nvidia looks really good. A bunch of AI stocks are pretty green today. MMA 1 for 100 reverse split according to Pawn. So that's a bad sign. I'm surprised they're not down more, you know. Our Discord's actually starting to grow a little bit, guys. So listen, if you haven't already joined the Discord, it's completely free. It doesn't cost anything. You can kind of chat with us in the Discord, hang out with us. There's the link right there if you want to check it out. Still waiting for SoFi. I'm seeing them dip down to $8 a share. Waiting for these numbers to show up. Let's see if we get anything else. Again, they're technically supposed to drop in 6 minutes. They're not out yet, but they're technically supposed to drop in 6 minutes. If it's a beat, what do you think the pump will be? I think $1 to $2 is excessive for a pump. I seriously doubt it. It's even if it comes in better than expected, I seriously doubt it pumps $2. I mean, you got to think it percentage-wise, all right? So $2 is 25% of $8, you know? So, like, that's a big ask, I guess, is what I'm trying to say. Maybe it does. I don't know. But that's a big ask. Like, rip it up 25% on earnings is usually pretty rare. Now, it is SoFi. It is a cheap, you know, smaller cap company. But again, I mean, you got to look at revenue. Looks pretty solid for SoFi. I think revenue is impressive. All right, guys. Is this real? Bro, I'm scared of flying a plane, dude. So it's ironic that I'm in Boeing right now. You know, I'm just doing my part and help airlines be safer here, you know. I'm in Boeing right now. We got 4 minutes here. We're waiting for SoFi numbers to drop. 4 minutes, technically. And we don't know if they're late. I think last time they were a little late. What is the actual call here? Okay, so the call's at 8 a.m. Should we do the call? I guess we should. All right, we got over 300. It's the busiest week of the year, guys. It's the busiest week of the year. What I mean by that is today, this specific week, let me blabber on some more about this. This specific week, we've got SoFi earnings. We've got Microsoft earnings. We got AMD earnings, Google earnings, Amazon earnings, Meta earnings, and more. We got all the big boys. Literally every major tech stock you could imagine that releases earnings is this week, except for Nvidia. So again, we got Supermicro. We got Pfizer, GM, UPS, JetBlue, Marathon Petroleum. We have AMD, Microsoft, Google, Starbucks, EA, Juniper, Match.com, Boeing, MasterCard, Philips, Thermo Fisher, NASDAQ, Boston Scientific. We've got QCOM, Wolfspeed, a bunch of other ones too. We got Altria, Royal Caribbean, Merck, Peloton, Amazon, Apple, Meta, X, US Steel, that is, Clorox, Microchip Tech, Skechers, Deckers. We've got ExxonMobil, Chevron, AbbVie, Charter, Bristol Myers. And that's just in terms of earnings this week, just in terms of earnings. Following all this stuff, tomorrow, we've got the JOLTS report, CB consumer confidence, ADP non-farm employment change, Fed, the FOMC meeting and interest rate decision. The biggest day of the week is Wednesday. Thursday, we've got jobless claims, non-farm productivity, ISM, S&P, ISM PMI and S&P manufacturing PMI, non-farm payrolls, unemployment numbers. It's the craziest, busiest week of the year. All right. And we're going to cover all of it live. Hit the subscribe button if you haven't already. We're going to cover all this stuff live like we always do. SoFi at 801. I don't see any earnings out for it yet. We're just kind of sitting tight. We'll cover it as soon as it drops. Will this market end green? Yes or no? Yeah, dude, there's no way I'm going. If I had a brother and he flew a plane, I would never, ever ride with him. Never, ever, ever, ever ride with him. All right, planes are super small. Planes are not super safe, bro. I don't care what they say. They're just not that safe. All right. They're just not that safe. Like little bitty planes, Cessnas, they're just not safe. I'm already scared of heights. All right. But the odds are not super great in small planes, bro. They're just not, you know, again, like a few years ago at the LSU, a few years ago in 2019, on their way to cover the LSU national championship game, this girl Carly passed away in a little bitty plane in Lafayette. You know, they're just not safe. They're just not safe. You know, there's no freaking way I'm ever about to get into a little bitty plane ever. Screw that, dude. I'm straight. I'm good. No way. I'm scared of flights as it is. All right, crypto, guys, as we look at it right now. Bitcoin back up to over 42,000. That's nice. All right, guys, SoFi. All right, there's SoFi. It is moving. So SoFi is moving. It looks like the report dropped when I thought it would, right at 7. SoFi now down to 780s. They're back up to $8 a share. Let's see if it moves some more. SoFi. Back up to 803 for SoFi, guys. Trying to move down to 790s. Waiting for SoFi here. I don't see anything yet. All right, there you go. SoFi numbers are out. SoFi posted. All right, SoFi numbers are out. SoFi posted record fourth quarter adjusted EBITDA of $181 million, up 159% year over year. Fourth quarter positive net income of $48 million. GAAP EPS of 2 cents profit per share. They did show a profit. New members added quarterly of almost 600K, 585K. Total members up 44% year over year to 7.5 million. Quarterly new products add 695,000. Total products up 41%. Fourth quarter total deposit growth of 2.9 billion. So they did better than expected everywhere, I think. EPS was more profitable than expected. Revenue was higher than expected. All right, guys. So again, numbers are out. I think they did better than expected, personally. We delivered another quarter of record financial results and generated our 11th consecutive quarter of record adjusted net revenue of $594 million. We saw new members add of nearly 585,000 and growth of 44% for total period end members of over 7.5 mil, with new product adds of nearly 695K and growth of 41% to over 11 million total products at period end. Record revenue at the company level was driven by record revenue across all three of our business segments, with all three of our business segments, with a record contribution of 40% of adjusted net revenue generated by our non-lending segments, our tech, platform, and financial services segment. On a consolidated level, we saw sequential year-over-year expansion of our net interest margin to 6.02%. We also generated record EBITDA of $181 million, representing 159% year-over-year growth and 74% incremental adjusted EBITDA margin, with all three segments profitable on a contribution basis. This equates to a 30% adjusted EBITDA margin, in line with our long-term target. We generated positive GAAP net income of $48 million in the quarter and EPS of 2-cent profit per share. Finally, we generated $204 million in tangible book value growth in the quarter and $334 million for all of 2023. End quote. And that was Anthony Noto, CEO of SoFi. Can y'all not hear the music? And they gapped all the way down, and now they're back up to $8 a share. Can y'all not hear the music? All right, but yeah, that is SoFi's numbers here. We're reporting it live like we always do. SoFi now going green on their earnings, going green after a pretty big dip. They're back up to 8.15s as they run. 8.15s. Wow. Okay, you can hear the music, but it's very quiet. All right, gotcha. There you go. All right, big rip up to 822s for SoFi. Again, the numbers seem good to me personally, but again, you know, that's kind of what they do. All right, so again, we're going to put these numbers up on screen for SoFi. Adjusted EPS positive, 2-cent profit, up from 5-cent loss year over year. Adjusted sales beat expectations as well. All right, look at SoFi up to 830s here, guys. Starting to rip up. Sorry, I had to change that song. But yeah, SoFi starting to rip at 830s right now. 830s. Microsoft at 407s. SoFi is more of a lender. SoFi is more of a lender. Bitcoin moving up a little bit too. I wonder if they're correlated. All right, let's look at Bitcoin here. All right, so we got a little dippy dip. Our Bitcoin up to 42.3 thousand. All right, so there's Bitcoin. Still red on the day though, but Bitcoin has had a pretty good week, all things considered. Back up to 40s. SoFi at 820s right now, 820s. Just bought 2 shares. Hey, good luck, bro. Yeah, again, we got AMC here, guys. I'm curious to see, like, there's AMC. Look, we got Bitcoin here too, but SoFi having a great run. SoFi having a great run. They get good earnings, man. I think their revenue is impressive looking. So I think their revenue is pretty solid, you know, for SoFi, in my opinion. You know, I think their revenue graph is really the most impressive part. You know, I think their revenue is genuinely impressive. And if we look at SoFi here, up to 835s now. Looking solid. Looking solid. Yeah, I'm in SoFi right now. We're green on it. Up to 840s. So if I will jump 25% up today, problem it will drop back down. If what jumps up 25%. SoFi looks great and will attract many investors. Yeah, again, the thing that looked good to me on SoFi was the revenue. Their revenue is genuinely impressive. Again, we talked about this before the earnings reported. Again, we've covered this numerous times. This is their revenue. This is their revenue. So it's genuinely impressive. It's genuinely impressive. Again, pretty solid revenue. We're going to post about this because... All right, guys, so we'll put this number up on screen, too, for SoFi. Come on, TD Ameritrade. I wish it would do better at alerting me. Usually it does a better job of reporting these numbers. Yeah, SoFi posted better than expected. All right, so we got these numbers in. Yeah, we do have earnings. Yeah, lending platform with high interest. Well, yeah, I mean, it's a short-term lending platform. So, I mean, it's going to be higher interest relative to, like, a mortgage or something like that. Of course, the interest is high. SoFi, rip it up. You love to see it. You love to see it. Yeah, it's the biggest week for everything, Alan. Not just earnings, but everything, dude. It is a crazy busy week, man. We got all the big tech earnings you could think of: Amazon, Apple, Meta, Google, AMD, Microsoft. You know, everything you could think of in earnings is basically this week, except for Nvidia. Nvidia is the only one where we don't have this week. But aside from that, we've got the FOMC rate hike decision Wednesday. We've got non-farm payrolls and unemployment Friday. We've got jobless claims and non-farm employment change numbers. We got the JOLTS report tomorrow morning. So overall, it's just an incredibly busy week that we're going to, you know, these are the weeks that grow my channel a lot. And so I'm excited for them. And again, we'll probably cover the earnings, I'm assuming. But yeah, SoFi rip it up, finally pulling back some. Should we buy a little bit more of this? I think we'll go ahead and buy some. We'll buy, what? Get in a little bit more there. Yeah, it's a busy week. It's a very busy week. We got a lot of stuff going on this week. Yeah. Yeah, I mean, honestly, guys, I don't realize how, what's the word for it? How nerdy I sound sometimes on this stream. I was watching one of the shorts that I posted. I was watching it. I sound nerdy, man. I sound nerdy. I sound much more nerdy. Like, I think I put on, like, a customer service voice to you all. It's not really how I talk or how I speak. I think when I speak to, like, family and friends, I have a little bit more of an accent. But on this stream, I sound super nerdy. Like, hey, guys, we're going to go to the store. You know, I'm sorry for that, guys. I'm sorry for that. You know, I think it's just a customer service voice. I'm on you. I got 500 people here, you know, so it's like, dude, I'm from Australia. You don't sound nerdy? Hey, well, thank you for that. I appreciate it. Are you streaming the earnings? Yeah, we'll stream it. Yeah, I mean, with SoFi, you got to understand, it's short term. It's short term. Okay, so any short-term loan, you're not going to get a freaking 2% interest rate. It's just not like that. Nothing's like that. If you want a hard money loan in real estate, you're about to pay for that. Any short-term lending, you're going to pay for it. You know what I mean? And that's their niche. You can't really knock them for it. Hey, thank you, Spike. I appreciate it, brother. Thank you, man. I noticed your accent is a lot thicker in your earlier videos. Yeah, I mean, over time, my accent's kind of gone away a little bit. I'm from Baton Rouge, Louisiana, so I'm from like an hour away from New Orleans. And so my accent is a little bit different than what you all hear, to be honest. But I think over time, talking so much on these streams has kind of made it go away as well. I think my accent's kind of gone away a little bit because I speak for, you know, like I speak for hours and hours publicly every day. And so I think over time, it just kind of dwindles down my accent, if that makes sense, over time, just from speaking so much. I think over time it just starts to go away. Do you, bud? I'm from Texas. Yeah, I mean, it's all good, radical. I mean, I'm in Texas right now. I'm in Houston. I live in Houston. You have a strong accent to me. Do you speak any French coming from Louisiana? No, man, no. I speak more Spanish than French. Most people in Louisiana don't speak French, though. There's a backdrop of, like, French culture, of, like, Cajun culture, that is. But it's not really, like, the only place in Louisiana that you're going to really find people speaking Cajun French is if you go to, like, the deep bayou places, like the bayou in Louisiana. Like, I know some people from the bayou, and they have a very, if y'all think my accent is strong, people from the bayou have a very strong accent. But again, it's kind of something in which, you know, it's not as common as you might think. If you hear Louisiana and you think, oh, Cajun French, it's not as common as you might think it is, you know. All right. Yeah, definitely top 3 most Cajun trader in the world. What a shame it was all French. I mean, that's kind of how most of the U.S. is. I mean, Florida was essentially a Spanish colony, you know? Like, you know, that's kind of how it goes. What time does the report come out? What report? What report are we talking about? Yeah, I mean, again, Cajun, it's a great, I love Louisiana culture. I really do. Louisiana's got a great culture. It really is. It's very fun, very accepting, very easygoing, very laid back for the most part. It's just a good culture. All right. I wonder if this is true. It can't be true. SoFi, yeah, SoFi dipping down a little bit, bouncing some at the volume weighted average price. I have 4 screens. I've got a pretty in-depth trading setup. We've got a 34-inch ultra wide on the top right here that you all see. Like, this screen right here is a 34-inch ultra wide. Underneath it, I've got another 34-inch ultra wide at the bottom right here, and then on the left side we've got a 27-inch, and then on the right side we've got a 27-inch. So we have a bunch of monitors, really. SoFi bouncing all the way back up. Look at the 200 EMA. If you want to know why you watch the 200 EMA, look at this level here. It's one of the reasons, like, if you're not watching the 200 EMA, you're missing out on a big milestone level that everybody should watch and pay attention to. You know. My Tesla 75 puts. Yeah, Tesla's up a lot today. Not a lot. A lot is relative, I guess. But, I mean, I hope SoFi continues up. We're holding it. I want it to go up. I hope it goes up. All right, we got the earnings call later on today. We will stream it, too. Yeah, so again, we've got the earnings call ready. Whenever it starts. The earnings call will be in about 40 minutes. We'll put the timer up so people can see when the earnings call actually is. But yeah, it's in about 40 minutes. Put this up right here. I mean, any time frame bag holder. Any time frame, man. It's not a perfect science. Nothing is. But I like watching it. It's just a milestone level that people pay attention to. You know, it's just a milestone level that a lot of people watch and pay attention to, you know. All right, so we'll put this up on screen. All right, again, SoFi earnings streamed live at 8 a.m. Eastern. All right, guys. So AMC were ripped. Yeah, AMC all the way down to $4 a share. $4 a share. Adam Aaron even posting on social media about it. He's not happy. Adam Aaron is blaming yeah. Aaron. Again, Adam Aaron, if you look at this, Adam Aaron making a post, he said, quote, "Media scoffed at my tweet, but it's all true. AMC's share price is so frustrating. The 23 actors and writers strike has ruined the early 24 box office. Almost all I think about is rebuilding AMC, etc. But go Chiefs." Or how about those Chiefs? So yeah, I mean, again, I mean, he made a post on the 23rd in January, 4 years after the pandemic. AMC stock has slid to $4.48. Difficult, and it's at 4.11s now. He said, quote, "Difficult to think about anything other than guiding AMC back in these challenging times." So, yeah, I mean, he's Adam Aaron is, again, though, his problem is very simple. Like, Adam Aaron's problem is simple. He diluted the company too much. He took a company that retail supported. He pandered to squeeze predictors, basically pandering to them. If you don't know what that means, basically, Adam Aaron would come out and say different buzzwords that he knew would cause, like, ape traders to get excited about, right? He would say all these buzzwords and keywords related to squeezes, like a crazy parabolic short squeeze in AMC. And he said them knowing that AMC was not about to squeeze like that. He said it knowing that AMC was not about to squeeze. And then when AMC was at its pinnacle of price over the last few years, maybe not the pinnacle, maybe that's an exaggeration, but when AMC was up there, then he hit everybody with a dilution. He diluted the company, sold more shares, and just destroyed interest in the stock, made AMC stock start barcoding sideways. It's just an unfortunate thing. It's just an unfortunate thing. Nobody who has an IQ of 187 says so on Twitter. Yeah, Dunning-Kruger. Maybe not the best context, but hey. All right, guys, 35 minutes. Trading Sofi isn't for the faint of heart, yeah. Where's the rip? SoFi's up a little bit. Bitcoin moving up a little bit too. Yeah, I don't even know what TC is. TC looks like a sketchy penny stock that's been highly manipulated. And so I'm good. Yeah, I mean, again, that's really what it is. He's just somebody like, and again, the problem, like, here's the problem I have with the AMC community, is that you got people like me that told everybody that AMC was vulnerable, that AMC was risky, that AMC wasn't about to make some crazy parabolic squeeze, yet you get predatory freaking vultures on social media pushing everybody for AMC short squeezing, telling everybody AMC's about to squeeze. For lack of a better word, they're freaking vultures, bro. Like, they're creating AMC accounts just to pander to the ape community and pump AMC stock up. And then when it didn't, they got mad at the people that were warning them. Like, instead of, I would respect a lot of people a lot more if they just came out and said, hey, John, you were right, you know. Or, hey, the people criticizing AMC were correct. You know what I mean? It's not their fault AMC's down here. You know, it's Ron and the insiders in the company. And so it is what it is. I mean, granted, to be fair, AMC, the sector of movies is a pretty rough thing right now. It's that the overall sector is pretty rough, you know, just to be fair. But still, all right, guys, there goes SoFi starting to move up. So far, starting to move up. All right, team. So, whew, what a day. What a day. Remember, we got the FOMC meeting this week, too, which is such a busy week. Hey, love the energy. Just found you this morning. Hey, thanks so much. The Discord is right here. So yeah, I'll put the Discord numbers up. Again, join our Discord, guys. It's completely free. It doesn't cost anything. Alright, SoFi is starting to move up. And again, we are green on SoFi right now. It's at 830s right now, 830s. Starting to bounce. Let's see if it continues. Microsoft up there. Here's the SPY itself. SPY up to almost 490s. What's the lifetime high on the SPY? 489s. So again, we still got a little ways to lifetime highs, but the SPY is green. You can see it was mostly flat yesterday. We got up to that 489 level. This is probably a really big level technical wise on a SPY chart. I mean, it's unlikely we're going to hit that level, but still. All right, so we're adding a news channel. All right. Yeah. What is SoFi? SoFi is an online lender, is what it actually is. So look at the SPY. SPY up to 488s. So yeah, SoFi is an online lender. Yeah, we got the JOLTS report tomorrow. Pretty big report. All right, guys. Let's see. So again, just to put this into perspective for next week, or this week, it's an incredibly busy week. Today's one of the slower days. We got SoFi's earnings call at 8 a.m. this morning, 8 a.m. in less than 30 minutes. Tomorrow, we've got all the major earnings. We got AMD, Microsoft, Google, just a lot more. We got AMD, Microsoft, Google, Pfizer, UPS, GM, JetBlue, Starbucks, EA, Juniper Match Group, Linden Club, Teradyne, a bunch of other ones, to be honest. And then the biggest day. What day do y'all think is the biggest for earnings? We got Tuesday, which is tomorrow. Again, Tuesday we have AMD, Microsoft, Google. Those are the big boys, the big tech companies. AMD, Microsoft, Google on Tuesday. On Thursday, specifically Thursday, guys, Thursday evening, we've got Amazon, Apple, Meta. I would go with Thursday's probably the busiest day. Thursday, Amazon, Apple, Meta, U.S. Steel, Microchip Technology. I think that's one of the busiest days. And then remember, Wednesday, we got the rate hike decision, the FOMC meeting on Wednesday, too. So it's a busy time. It's a busy time. Nvidia Day's the biggest. Nvidia Day's not for late February, though. Nvidia doesn't drop earnings until February 21st. And so, yeah, it's just going to be some time before that makes any... Then we have anything there. AMD's pretty big on Tuesday. Microsoft is big AI news. Yeah, I mean, we're going to stream Microsoft earnings tomorrow. That's the one we're probably going to focus on. The only other one that we could consider is AMD. I'm trying to see what we did last time for AMD earnings. I think we got a bunch of views last time. It's not as big as like Microsoft though. It's big, it's just not that big. I wonder why we closed this stream down so early when we covered Microsoft. It's a huge day. Oh, I know why. I know exactly why we closed the stream down. Because first we covered Microsoft and then we pivoted to all of them so we could cover every one is what happened. So again, Tuesday, let me see if we can do that this time. So yeah, Tuesday we got Google, Microsoft. When's the earnings calls though is the question. So we got Google. So like I could cover both of them if they space these out enough. What's 1:30 Pacific Standard Time to Central Standard Time? So it's gonna be again Google earnings are gonna be at 4:30 market time, at 4:30 market time. So that's pretty short afterwards, and then Microsoft numbers are gonna be let me check. Microsoft earnings are gonna be at 5:30 market time. So, oh wait. Okay. $2.30. Okay, so yeah, Microsoft earnings are going to be at 5:30 for the earnings call. 5:30. All right, so we might be able to do something where we cover both Google and Microsoft, is what I'm thinking. We cover Google and Microsoft. It just depends on what time AMD earnings are is the question. I don't know. Wait. Yeah. All right, so when we look at AMD, all right, so AMD earnings are at 5 too. Interesting. Super micro semiconductors today. Do you think it'll make a difference? I think it'll influence microchips a little bit. Look at SoFi rip here, guys. So SoFi moving. SoFi's moving up here. Yeah, join our Discord. We appreciate it. How high can SoFi go? I hope it goes high. I mean, we're in SoFi. We're green on SoFi. Let's hope it continues. And again, if you haven't already, guys, check out one of my sponsors. One of my sponsors is a company called Topstep. What they do is they give you a demo and they test your skill. And most day traders lose money. This is the cheapest way to get started day trading with limited risk. Most day traders lose. When I first got started, I lost like $4,000 in a couple weeks. And if you think you're going to be an outlier, you're probably not. And so a much better way to get started in day trading is the futures market and these funded account programs. Topstep's the most legit one in the world. What Topstep does is they give you a demo. The base one's a 50K demo. If you lose, your job is to hit $3,000 in profit without losing $2,000. So it's a 2 to 3 ratio, a reasonable ratio. If you can pass that test and make that money in the demo account, then they fund you $50,000 with a 90% split, up to 150K with a 90% split. And so with the 90% split, if you take that $50,000 funded account and you make 10K, you get to keep 9 of that. And so you're keeping most of your profit anyway. It's similar to putting the money up yourself, but there's noticeably less risk. If you lose that funded account, you're only out what you pay for it, which the base one's $50, $49. And so either way you look at it, it's the best of both worlds. It's limited risk, but if you pass it, you still keep 90% anyway. And again, they're a sponsor, so I'm biased in their favor, and you want to confirm all this stuff with them. But it really is the best of both worlds. Limited risk, but if you pass it, you're still keeping 90% anyway. They have free funding coaches, tons of great resources. It's just really useful for traders that want to learn to day trade. And in the futures market, I can essentially day trade the SPY price action and what's called the E-mini. I can essentially day trade the NASDAQ price action and what's called the NQ. And there's no PDT rule. I can day trade short, all that good stuff. If you want to check it out, there's the link. They are a sponsor of mine. SoFi did so well, I wouldn't be surprised if we see all-time highs. Yeah, the SoFi numbers that are impressive are their EPS graph is what's really nice for SoFi. Again, if you look at their EPS graph, that's what I think is pretty impressive when you look at SoFi's numbers here. Again, SoFi revenue graph, if you look at their revenue graph, it's legit impressive. Like, look at this revenue graph. We posted about this on Twitter. Like, look at this revenue graph. That's solid. Like, look at this. I mean, people can say whatever they want, and it is a new company. But that revenue is just genuinely impressive. Genuinely impressive. Like, look at that. Here's the yearly, or the trailing 12-month. Here's the quarterly. So, and again, I think this was last quarter, I think, too. Let me see. So, 7.757 billion. Let me see when this was. Okay, so, yeah, this was for the last quarter. All right, so let's see what we showed this quarter, too. All right, so I think we dipped a little bit in revenue, though, is the problem. So we only came in at 615 mil, I think. Let me make sure that this is right. I think they had good guidance, though, is I think what it is. Yeah, so their revenue was only 615 million, so they did dip a little bit revenue-wise. You know, so their next graph is going to really look like this. You know, so it did dip a little bit, but still genuinely impressive revenue graph for SoFi. And so the company's bringing in good money. And again, they finally swung to a profit. So again, SoFi finally swung to a profit, which is good, of course. And remember, we do have the earnings call for SoFi in 20 minutes, guys. 20 minutes. SoFi still moving up. The SPY still trying to hold. Still trying. We'll see if it does. Yeah, I mean, again, SoFi revenue looks good. EPS is slightly profitable now, where, again, that's the first time. If you look at their EPS graph, you kind of see why. So if you look at their EPS graph, you see why this earnings report is so good and why the market is reacting positively is because if you look at their revenue graph prior to today, right? So here's SoFi. They have lost money. They have lost money since March of 2021. Since March, or I'm sorry, yeah, since December of 2021, I'm sorry. So SoFi has lost money for this entire period of time. So them finally swinging to a profit is optimistic, and you can see SoFi up to 840s on that optimism. right, so the other thing I want to see is when is AMD earnings? AMD earnings at 5 o'clock. All right, Bitcoin at 42,000. So Bitcoin now dipping down a little bit. If we look at coin market cap, all right, so again, here's Bitcoin. Bitcoin now falling down a little bit this morning. You can see slight red action. I wish, can I put up candlesticks on coin market cap? I'd love to. I know there's a way, I just don't know how. Ah, there it goes. All right, so yeah, here's Bitcoin. Bitcoin dipping down a little bit at point. What kind of chart is this too? Oh, this is an hourly chart. Bitcoin still over 42,000 is good though. It's solid. Hey, what's up, Sherry? Yep, it surges at the opening bell. Yeah, we'll see. We'll see. All right, remember, we got the SoFi earnings call at 8 a.m., 8 a.m. team. SoFi still heading up. Let's watch the SPY. Here's the NASDAQ. Here's the NQ. You can put up the QQQ price action. It's the same thing as the NASDAQ. You can see the Q is at 424.50s, 424.50. So we'll see if that level holds. All right, guys. What's Tesla? What do you mean Tesla ES? That's just the symbol. So live trading Tesla, live trading the E-mini. Should I put in market order now or wait for the market to start? I mean, that's all up to you, Fed. Market orders are not going to get filled right now. So that's unless you're talking about futures. If you're trading futures, a market order might get filled. But if you're trading the S&P 500, or if you're trading stocks, you can only use limit orders in pre-market. So you're not going to get filled today with a market order, basically. Mara? Yeah, Mara's up with Bitcoin strength. Mara's a mining company. So Mara's up a little bit on Bitcoin strength. We got about 13 minutes left until the earnings call for SoFi. About 13 minutes left. It's really the busiest week of markets this week, guys, for sure. It's a very busy week. We got a lot of stuff going on. So again, subscribe, hit the notification bell. We're going to cover all of this stuff live like we always do. Quant Tower, Adam, is what I use. If you can use Topstep X, that's a good option too. So Quant Tower, Topstep X. You know, here's the link again if you want to check it out, Adam. But Quant Tower, Topstep X. I use Quant Tower personally, but it's subjective. Which one's the best is subjective. All right, looking at our poll numbers, 61% think better or worse than expected. Let's go ahead and end that poll since those numbers are already out. And we'll ask a different question. With the crazy economic and earnings week ahead, does the SPY close green this week? Or let's do the QQ, or let's do the SPY. Does the SPY close green this week? Yes or no? Vote on that poll. With the crazy economic and earnings week ahead, does the SPY close green? Hey, all good, Adam. Good luck, bro. Can SoFi impact the NASDAQ? Not much. It's not a heavily weighted stock like that. And so it's just not a super heavy weighted stock, in all honesty. Again, we're going to stream the SoFi earnings call live at 8 a.m. SoFi is technically green. It's at 8:40s. Big green action on SoFi on the day. Again, so let's just go ahead and break through some SoFi numbers. Adjusted EBITDA for the first quarter guidance was 110 to 120 million. SoFi's first quarter adjusted net revenue guidance came in at 550,000 to 560,000, or 550 to 560 million. Fourth quarter new product adds are nearly 695,000. Total deposit growth was 2.9 bill. Fourth quarter new member adds nearly 585K. Adjusted net revenue for the fourth quarter came in at 594 million. So far, SoFi is doing pretty well. Having some positive news as well. Yeah, good revenue surge for SoFi. All right, Q, break it down a little bit. Here's the SPY itself. Again, hit the live button next to the play button. We got about 10 minutes before SoFi earnings call. We are waiting on hold for the SoFi earnings. Today, NASDAQ red or green? I really don't know. I think so far it's green today. It depends. Earnings are coming out tomorrow, so today might be a choppy day. Again, following last week, we have so many economic and earnings and market influences this week that I think the market could be sideways today. Like, let me explain a little bit. So, again, earnings-wise, tomorrow we have AMD, Microsoft, Google in the evening. We got a bunch in the morning as well, but big boys in tech and heavily weighted NASDAQ stocks, AMD, Microsoft, Google earnings tomorrow evening. Tomorrow morning, we have what's called the JOLTS job opening report. It's a very big report, very relevant report, and very influential report. That report's tomorrow at 10 a.m. Along with CB Consumer Confidence. So tomorrow we have the JOLTS report, and we have CB Consumer Confidence at 10 a.m. tomorrow morning. We're going to stream that live like we always do as well. Also, Wednesday, we have some stuff in the morning. Like specifically Wednesday, we have the ADP, the prelim payroll data. It's called the ADP non-farm employment change. That drops Wednesday morning at 8:15. And then at 2 p.m. on Wednesday, we got the FOMC rate hike decision. Very big day for markets. Very busy day for markets. Again, Thursday, we've got jobless claims, non-farm productivity, and both ISM manufacturing PMI and S&P US manufacturing PMI. That is on Thursday morning. So Thursday morning, we got a bunch of stuff too. And then Thursday evening, we have the big boys come out with Amazon, Apple, Meta earnings all Thursday evening. Very busy day with all these earnings. And then Friday morning, we have oil earnings, basically. We've got oil earnings with Chevron, Exxon, and a bunch of other ones. And then Friday morning, I forgot this too. Friday morning, we've got non-farm payrolls, unemployment numbers, consumer sentiment, factory orders. It's just like every single day this week, both morning and evening, we got a lot of economic and market influences. It's going to make the market move a lot. And so with that, today, which is a pretty quiet day relative to the rest of this week, like we don't really have any big earnings today. The biggest earnings call we have is SoFi earnings, and we're going to stream that in 8 minutes, in 6 minutes or so. But aside from that, we don't really have any big boy economic reports or earnings outside of SoFi. This evening, we've got Supermicro Semiconductors. That might be an economic influence. It might influence the microchip sector, and they're expected to come in at almost $3 billion in revenue at $2.78 billion. EPS is expected at $5.03 per share. And so we do have Supermicro earnings this evening. Again, not a big company like the rest of them are necessarily in heavily weighted tech. Let me see. Supermicro. I'm trying to see what the rank is on the S&P. I don't think Supermicro is listed on the major exchanges. But it will influence microchip volatility as a whole, right? So, yeah. Not trying to complain, but you are like yelling at us today. I'm hyped up for the news. I'm sorry. Should I whisper? No, I'm just joking. You guys know me. When I get hyped up, I start to yell. Maybe I'll pull the mic a little bit farther away. I mean, we are running a show here, and so, you know, we yell when we got to yell. I'm sorry. Buyer puts now. Yeah, will the market go up or down, guys? Let me know. We got 5 minutes. Where are you seeing this news? What news? Again, SoFi at 8:30 is here, guys. We still got about 5 minutes. Yeah, Ally is more of like, I would say like a savings account company though. I think they're a little bit different in terms of company. SoFi is more so based around lending. And I know Ally lends as well, but they're just a little bit different, you know. It's funny how everyone remains bullish after this huge run. I wouldn't say everybody's bullish, you know. I just don't think everybody, like, I think most people aren't pushing for a market to go down. You know, if you find yourself mad at markets, I think, you know what I mean? I think if you find yourself mad at markets, it's kind of like, I don't know if it's the best position to have. I think you have to be flexible with markets. You have to understand that nobody knows what the market's going to do. We don't know if the market's going to go up, down, or sideways. And the market doesn't have to do anything. It's not supposed to do anything. You know what I mean? And so again, I've always said, if you find yourself bearish long-term on markets, you're doing something wrong, you know? Everyone here thinks the markets will only go up. What makes you say that? Buy puts now? I'm not saying buy puts. I don't know what you should do. How come so many people bought Tesla, especially the $150 million order last week, and Tesla's still dropping? I'm not sure. Yeah, I don't know. Is it time to buy Tesla, guys? Let me know. The poll's pretty split. It's 45-55, and so I wouldn't really call that everybody, and that's only out of 92 votes. We're basically asking people, and again, I think regardless of how much the market is up or down, I think this week is a little bit different because this week we have earnings, the FOMC meeting, non-farm payrolls and unemployment, the JOLTS report, and a lot of other stuff. And so it really depends on what you think the market will do regarding these earnings. You know what I mean? Like, the market has a lot of different reports coming out this week, and so regardless of extension and technicals, like, the thing to understand is that fundamentals are going to trump technicals. So regardless of how good the pattern is, how good the technical nuance of the market is at any period of time, if CPI comes in low or CPI comes in high, the market's going to follow that more than any technical move of extension or anything like that. And so I think we have to keep that in mind when we look at this week, because this week we've just got a lot of different stuff dropping. We've got economic reports, we've got earnings, and so I don't know what the market's gonna do. Maybe the market goes up, down, sideways. I don't know. I think in the end, we can't wait for the market to correct. I think the easiest way to put it is like this: every time the market moves up, the biggest mistake most long-term investors make is that they sit around waiting for a big pullback and they miss the market going like this. Right? Like, they talk themselves out of taking long-term positions because they want the market to pull back some. But long term, the market's gonna go like this. You know, it might pull back in between, but generally speaking, it's usually gonna continue going up. We might crash, we might correct, but generally the market's gonna go up over time. And so again, maybe we pull back, maybe we crash sometime soon, maybe we are extended right now. I really don't know. That's not really true for earnings. Yeah, I mean, I think one thing that's very clear with earnings is that nobody knows what's going to happen. You know, a company can post better than expected guidance, better than expected revenue, better than expected EPS, and drop 10%. And on the other end of that, a company can report way worse than expected guidance, revenue, EPS, and rip up 5 to 10%. And so with earnings, you never really know. And especially earnings this week with major economic influences like the FOMC meeting, it really is kind of up in the air what's going to happen here, in my opinion. Like, I don't know what's going to happen. I don't think anybody else really does either. I think we just got to sit back and wait. I think Papa Powell will definitely make my calls print heavy short term on Wednesday. Yeah, 2 p.m. on Wednesday, we have the FOMC rate hike, or rate decision. It's not going to be a hike. It's almost certainly going to be a pause. All right, guys, you guys ready? Y'all can hear me, correct? Let me switch headphones out. All right, guys, we got about a minute left before the SoFi earnings call. I'm going to switch headphones to make sure we got one that's fully charged. Yeah, Nancy coming through with some stats. SPY up 18% over the last year. Average around 9% with standard deviation of 16%, up 23%. A 52-week period is completely normal. It's foolish to say it's overbought. I don't know. I think it could be overbought. I just don't think, like, I think you see bears a lot of the time say the market has to do something. And I think that's a fallacy. I don't think the market has to do anything. Real quick, y'all can hear the music, correct? I just want to make sure y'all can hear the music. I mean, it could certainly happen, Yair. You know, for sure, it could certainly happen. I mean, again, it doesn't mean it will, but it could. Just sound check 1 2 1 2. Y'all can hear the music, right? Yes. Okay. Good. All right. So we're gonna have to turn the music off, and we're gonna get ready for the earnings call starting. Here, let me turn this off. Sure we are live. Yes, we are. All right, good. All right, chat. Earnings call is about to start. All right, guys. So again, we are waiting for the earnings call to start. So if I push it up to almost 850s here, almost 850s. All tech are showing overbought territory. Yeah, I don't think you can be too rigid though, Yair. I think that's the problem, is that I think being too rigid with one specific direction, you know, I don't know if it's the right move. You know what I mean? I think you got to just be flexible. I think one thing the market proves time and time again is that it could do anything. It doesn't have to do one specific outcome or the other. It doesn't have to do one specific direction or the other. I think you just got to be flexible, brother. You know, if you're too rigid with one specific stance, you're prone to get beat up in markets. Sound check.
Good morning. My name is Daisy, and I'll be your conference operator today. At this time, I would like to welcome everyone to the SoFi Technologies Q4 2023 and full year 2023 earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad.
Let me know if this sounds good, guys.
If you would like to withdraw your question, please press star followed by 2. Thank you. With that, you may begin your conference.
Thank you, and good morning. Welcome to SoFi's fourth quarter and fiscal year 2023 earnings conference call. Joining me today to talk about our results and recent events are Anthony Noto, CEO, and Christopher Lapointe, CFO. You can find the presentation accompanying our earnings release on the Investor Relations section of our website. Our remarks today will include forward-looking statements that are based on our current expectations and forecasts and involve risks and uncertainties. These statements include, but are not limited to, our competitive advantage and strategy, macroeconomic conditions and outlook, future products and services, and future business and financial performance. Our actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are described in today's press release and our subsequent filings made with the SEC, including our upcoming Form 10-K. Any forward-looking statements that we make on this call are based on assumptions as of today. We undertake no obligation to update these statements as a result of new information or future events. And now, I'd like to turn the call over to Anthony.
Thank you, and good morning, everyone. 2023 was a remarkable year for SoFi. We achieved multiple records and realized many of our aspirations despite seismic geopolitical and macroeconomic events. We demonstrated that we have built a business to thrive in a host of challenging environments, reacting swiftly to change, driving our business forward with standout financial performance while continuing to serve our members' needs. Our 2023 results have reinforced my conviction in our long-term potential and our ability to achieve our aspiration to become a top 10 financial institution. I'd like to highlight some of our notable achievements for the year. We reached GAAP net income profitability in the fourth quarter and are positioned to continue to drive positive GAAP net income in 2024. We grew adjusted net revenue by 35% for the year to a record of $2.1 billion, while adjusted EBITDA of $432 million increased 200% versus 2022. This represents a 54% incremental margin and a 21% consolidated EBITDA margin for the full year, compared to our long-term margin target of 30%, which we achieved in the fourth quarter of 2023. Total members and products both grew over 40%, with 2.3 million new members in 2023 for a total of 7.5 million members. And we added 3.2 million new products for a total of 11 million products at year-end. We continue to diversify our revenue, with financial services and the tech platform contributing 40% of fourth quarter adjusted net revenue, up from 34% in the year-ago quarter. Our financial services segment achieved positive contribution profit in the third quarter, which ramped further in the fourth quarter. We completed a dramatic shift in tech platform's product offering and focus, positioning us to capture the massive opportunity in the traditional banking sector, in addition to tech and consumer companies looking to provide financial services. In lending, 72% of adjusted net revenue was from net interest income, compared to 48% in fiscal year 2022. Net interest income offers a more recurring and predictable cash revenue stream compared to non-interest income. We generated $334 million in tangible book value growth, which is now set to accelerate in 2024. Total deposits grew by $11.3 billion in 2023 to $18.6 billion, and over 90% of our consumer deposits are from direct deposit members. SoFi Bank reported net income of nearly $350 million, a 21% margin, with a return on tangible equity of 15.9% in its first full year of formation. To put some of these achievements in the context of a longer-term perspective, I'll note the following. When comparing our business to fiscal year 2018, which is when I joined SoFi and we embarked on our new strategy, we have grown annual adjusted net revenue by more than 8x, annual EBITDA by almost 3x, or $660 million, members by more than 11x, total products by 16x, and consolidated net interest income by nearly 5x. And since adding several financial services products in 2019, we have grown annual financial services revenue to more than $430 million, financial services products to 9.5 million in total, and financial services products now comprise 85% of our total products. The fourth quarter really capped an exceptional year. Record adjusted net revenue of $594 million accelerated to 34% year-over-year growth, while record adjusted EBITDA of $181 million grew 159% with a 30% consolidated EBITDA margin. This EBITDA margin is up 14 percentage points year over year and is now equal to our long-term target of 30%. Financial Services segment contribution profit grew to $25 million, an 18% margin versus $3.3 million last quarter and negative $44 million in the year-ago quarter. Our deposits grew by a record of nearly $3 billion in the quarter. Tech Platform segment revenue growth accelerated to 13% year over year on its way to 20% next year, with a 32% contribution margin versus 20% in the year-ago quarter. In lending, 76% of adjusted net revenue was net interest income, up 43% year over year to $263 million. We point this out because $263 million in cash revenue is 2x greater than our directly attributable segment expenses of $120 million. Segment contribution margin improved by over 500 basis points sequentially to 65%. Company consolidated GAAP earnings per share was 2 cents, with GAAP net income totaling $48 million versus a $40 million loss in the year-ago quarter. SoFi Bank's net income of $129 million represents a 27% margin and an annualized return on equity of 16.8%. In terms of our balance sheet, we grew tangible book value for the sixth consecutive quarter by $204 million at the consolidated level, reaching $3.5 billion in total. Our total capital ratio improved to 15.3% from 14.5% last quarter, helped by organic tangible book growth, over $1 billion in loan sales, capital optimization moves, and an opportunistic convertible debt repurchase of $72 million. From a member and product perspective, in the fourth quarter, we added 585,000 new members for a total of over 7.5 million members and 695,000 new products for a total of over 11 million products. Now I'd like to spend some time touching on quarterly segment level results. Lending adjusted net revenue of $347 million grew 10% year over year against a difficult comparison of 51% year over year growth in the year ago quarter. Personal loan originations grew 31% year over year to $3.2 billion. Student loan originations grew 95% year over year to $790 million, and home loan originations increased 193% year over year to $309 million. Within financial services, net revenue grew 115% year over year and 18% sequentially to $139 million, driven by continued strong monetization within the segment. We achieved $25 million in contribution profit despite our significant investment across money, credit card, and invest. As we noted last quarter, the credit card and invest businesses are still in heavy investment mode, with losses of over $100 million annually on a run rate basis. Through unit economic optimization and greater scale, these businesses will eventually see positive contribution profit, similar to how we deliver with SoFi Money. We continue to see strong growth in SoFi Money products and, importantly, high-quality deposits and great levels of engagement. This has led to higher average account balances, even as average spend has increased. SoFi Money products have increased 54% year over year, or by nearly 1.2 million to 3.4 million accounts. As important is the quality of these members, with a median FICO of 744 for our direct deposit portfolio, and hence we see ample opportunity for cross-buy. In terms of engagement, over 50% of our newly funded SoFi Money accounts are setting up direct deposit by day 30. This account primacy drives spending, which exceeded $1.5 billion in the fourth quarter debit transactions of volume. This is up nearly 3x year over year and represents more than $6 billion of annualized debit transaction volume. Our invest products, excluding crypto from all periods, grew 20% year over year to a total of 2.1 million, with AUM increasing 54% year over year. We've continued to launch exciting new products that meet our members' needs in financial services to further accelerate new member growth and cross-buy. Just today, for instance, we announced the launch of alternative investments and mutual funds. With the launch of alts, SoFi is granting yet another opportunity for everyday investors to access investment opportunities traditionally reserved for institutional investors and the ultra-wealthy. For our tech platform, revenue of $97 million accelerated to 13% growth year-over-year, up from 6% in Q3. We continue to make significant strides in our strategy of leveraging our unique product suite to pursue diversified growth and larger, more durable revenue opportunities. We started to see evidence of this strategy in the fourth quarter, as growth was driven not just by continued strong organic growth of existing partners and new product adoption by them, but also by notable contributions from increasingly diversified clients which have launched within the last 6 months. As mentioned last quarter, demand from traditional financial institutions and non-financial categories remains strong. While lead times for winning RFPs and ensuing integrations are measured in many quarters, not months, the transition to modern processing and modern cores is playing out in real time the way we envisioned it. On the product side, we continue to build and ship a diverse range of products for multiple sectors. Most notably, we launched an expense management solution in partnership with MasterCard that provides clients in the B2B sector with insights into corporate card spend. We launched same-day ACH, which allows account holders faster access to funds and helps mitigate risk tied to transactional delays. And we launched a risk data mart and data pipeline for our payments risk platform, which is seeing rapid adoption from existing clients. With that, let me turn it over to Chris for a review of the financials for the quarter and our 2024 outlook. I'll return to review our multi-year outlook after Chris shares his thoughts.
Thanks, Anthony. The Q4 and full year 2023 results really prove once again that our diversified and differentiated business model drives SoFi's durability and long-term growth potential. I'm going to walk through key financial highlights in our financial outlook. Unless otherwise stated, I'll be referring to adjusted results for the fourth quarter and full year of 2023 versus fourth quarter and full year of 2022. Our GAAP consolidated income statement and all reconciliations can be found in today's earnings release and the subsequent 10-K filing, which will be made available next month. For the quarter, we delivered record adjusted net revenue of $594 million, with growth accelerating to 34% year-over-year and 12% sequentially from the third quarter's record of $531 million. Adjusted EBITDA was $181 million at a 30% margin, which is our long-term target margin, up over 80% from the prior record quarter of $98 million. This represented over 14 percentage points of year-over-year margin improvement and 12 percentage points of sequential margin improvement, demonstrating significant operating leverage across all functional expense lines. In fact, sales and marketing declined as a percentage of adjusted net revenue for the fifth consecutive quarter. Total operating expenses declined roughly 17 points as a percentage of adjusted net revenue year-over-year. Overall, this resulted in a 74% incremental adjusted EBITDA margin year-over-year. We achieved GAAP profitability this quarter for the first time, with GAAP net income reaching $48 million, an $88 million improvement year-over-year, and an incremental margin of 55%. We saw continued year-over-year leverage in stock-based compensation, dropping to 12% of adjusted net revenue versus 16% in the prior year period, on our path to our longer-term goal of single-digit stock-based compensation margins. For the full year, we delivered $2.1 billion of adjusted net revenue, up 35% year-over-year from $1.5 billion in 2022. Adjusted EBITDA rose 201% year-over-year to $432 million at a 21% adjusted EBITDA margin. Our full-year net loss was $54 million and 10 cents per share, excluding the goodwill impairment charge taken in Q3. We exceeded the high end of our most recent revenue and EBITDA guidance by $9 million and $36 million, respectively, by leveraging our unique suite of products and services, nimble asset and resource allocation, as well as a relentless focus on unit economics and risk management. Now on to the segment-level performance. In lending, fourth quarter adjusted net revenue grew 10% year-over-year to $347 million, with $226 million of contribution profit at a 65% margin, up from $209 million a year ago. These results were driven by 43% year-over-year growth in our net interest income, while non-interest income was down by 36%, primarily driven by increased losses and prepayments. Growth in net interest income was driven by an 82% year-over-year increase in average interest earning assets and a 122 basis point year-over-year increase in average yields. This resulted in an average net interest margin of 6.02% for the quarter, up 3 basis points sequentially and 8 basis points year-over-year. I'd also highlight our $2.9 billion of deposit growth in the quarter compared to the $1.6 billion of net loan growth on the balance sheet. The 218 basis points of cost savings between our deposits and our warehouse facilities has resulted in a meaningful benefit to our net interest margin. It also underscores the benefits of having the option of holding loans on balance sheet when advantageous and collecting net interest income. We expect to maintain a healthy net interest margin and benefit from the continued mix toward deposit funding, along with our demonstrated high loan WAC betas. On the non-interest income side, Q4 originations grew 45% year-over-year to $4.3 billion and were driven by growth across all three products, even as we continue tightening and underwriting against our stringent credit standards. We saw typical seasonality and intentionally planned for lower originations in our personal loans business, with originations of $3.2 billion, up 31% year-over-year and down 17% sequentially. Our student loans business saw origination volume nearly double year-over-year and declined 14% sequentially to $790 million. Home loans grew by 193% year-over-year and declined 13% sequentially to $309 million. Our personal loan borrowers' weighted average income is $171,000, with a weighted average FICO score of 744. Our student loan borrowers' weighted average income is $154,000, with a weighted average FICO of 781. Our Q4 on-balance sheet delinquency rates and charge-off rates continue as anticipated to normalize back toward pre-COVID levels. Our on-balance sheet 90-day personal loan delinquency rate was 56 basis points, while our annualized personal loan charge-off rate was 4.0%. Our on-balance sheet 90-day student loan delinquency rate was 13 basis points, while our annualized student loan charge-off rate was 59 basis points. We continue to expect healthy performance relative to broader industry levels. In the fourth quarter, we sold portions of our personal loan and home loan portfolios totaling $1.2 billion, approximately $875 million in personal loans principal and $350 million in home loan principal. In terms of the personal loan sales, we closed a previously disclosed $375 million securitization with BlackRock, where we sold both bonds and the resid at an execution level of 105.1% and closed an additional $500 million of loans in whole loan form to multiple parties at a blended execution of 105.6%. These had similar structures to other recent personal loan sales, with cash proceeds at par or at a premium to par, and the majority of the premium comprised of the contractual servicing fees that are capitalized. These deals included a small loss share provision that is above our base assumption of losses and immaterial relative to the exposure we would otherwise have had if we held the loans. In the quarter, we executed $450 million of senior secured financing, which will show up on our detailed balance sheet as senior secured loans held for investment at amortized cost. These loans have a fixed term structure and are secured against the underlying assets, therefore equivalent to investment grade bonds if you were to do a securitization for the same pool of collateral. In addition, these loans are priced at market rates, which not only helps to diversify our balance sheet, but also provides an additional return above our cost of funding and a yield similar to the net interest margin of our loans, which are unsecured. Now turning to our fair value marks and key assumptions. Our personal loans are marked at 104.9% as of the year end, up from 104.0% at the end of Q3. This was a function of the discount rate decreasing by 103 basis points, which was driven by the underlying benchmark rate declining by 90 basis points and spreads tightening by 13 basis points. Notably, the benchmark rate change and the spread change are empirical, as they are actual market observed inputs, not assumptions. Partially offsetting the decrease in discount rate was an increase in the annual default rate assumption from 4.6 to 4.8%, as well as an increase in the annual prepayment speed assumptions from 20 to 23%, which has an immaterial impact on the overall change in the mark. When a borrower prepays, we are still capturing the principal and the impact to the value of the assets is only based on the premium above par at a given point in time, which is very small relative to the principal outstanding. We expect default rates to continue to normalize to pre-COVID life of loan loss levels of approximately 7 to 8%. For our student loan portfolio, the fair value mark at year-end increased to 103.8% versus 101.5% at the end of Q3. This was a function of the portfolio WAC increasing by 24 basis points and the discount rate decreasing by 57 basis points, driven by the underlying benchmark rate declining by 86 basis points and spreads widening by 29 basis points. Partially offsetting the decrease in discount rate was an increase in the annual default rate assumption from 0.5 to 0.6%. Importantly, the fair value benefits resulting from interest rate decreases as well as personal loan spread tightening was offset nearly 1-for-1 by hedge losses and spread widening in our SLR business. So there was no net revenue benefit in the quarter due to discount rate input changes. For the full year, lending adjusted net revenue grew 21% to $1.3 billion, and the segment delivered $823 million of contribution profit at a 62% margin. Moving on to financial services, where net revenue of $139 million increased 115% year over year, with new all-time high revenue for SoFi Money, credit card, and lending as a service, as well as continued contributions from SoFi Invest. Overall monetization continues to improve, with annualized revenue per product of $59, up nearly 50% year over year versus $40 in Q4 2022, and up 10% sequentially. This is driven by higher deposits and member spending levels in SoFi Money, greater AUM and monetizable features in SoFi Invest, and robust growth within SoFi credit card spend. We reached 9.5 million financial services products in the quarter, which is up 45% year over year, with 626,000 new products in the quarter. We reached nearly 3.4 million products in SoFi Money, 2.4 million in SoFi Invest, and 3.3 million in Relay. Contribution profit reached $25 million for the quarter, even as we continue to invest aggressively against the ample opportunities to rapidly grow this operating segment with attractive returns. Full-year segment revenue of $437 million is 2.6 times the $168 million we delivered in 2022, and we broke even on a contribution basis for the full year. Shifting to our tech platform, where we delivered record net revenue of $97 million in the quarter, up 13% year over year and 8% sequentially. Annual revenue growth was driven by continued monetization of existing clients, along with new deals signed in new client segments. Galileo accounts grew 11% year over year to 145 million. The segment delivered a contribution profit of $31 million, representing a 32% margin. We continue to leverage investments made to integrate Galileo and Technisys and position the segment for higher rates of diversified, durable growth going forward. We expect tech platform revenue to continue accelerating in 2024 with strong margins. For the full year, the tech platform segment grew revenue 12% to $352 million and delivered $95 million of contribution profit at a 27% margin. Switching to our balance sheet, where we remain very well capitalized with ample cash and liquidity. In Q4, assets grew by $2.1 billion as a result of $1.6 billion growth in loans and approximately $400 million of growth in cash, cash equivalents, and investment securities. On the liability side, deposits grew by $2.9 billion sequentially to $18.6 billion. Importantly, deposit growth outpaced net loan growth for the fourth consecutive quarter. As a result, we were able to reduce warehouse facilities utilized by over $700 million, resulting in more efficient funding costs as we continue to ramp the portion of loans that are funded by deposits. We exited the quarter with $3.2 billion drawn on our $9 billion of warehouse facilities. We grew tangible book value for the sixth consecutive quarter by a record $204 million to nearly $3.5 billion. In the fourth quarter, we opportunistically executed the buyback of a small portion of our outstanding convertible bonds, which was additive to our GAAP net income by $14.6 million, accretive to GAAP EPS, and additive to our total risk-based capital ratio by more than 30 basis points. Additionally, we entered into a credit default swap arrangement for $2.5 billion of refinanced student loans. These loans were reclassified as held for investment versus held for sale based on the fact that we intend to hold these loans until maturity, given the more attractive returns relative to pricing trends we see in the market today. We do not expect to see that price dynamic changing. The reclassification is consistent with fair value accounting practices and has no overall impact on our revenue and profitability. The credit default swap, however, does improve capital ratios as it significantly lowers the risk weighting for these assets and increased our total risk-based capital ratios by greater than 1% in the quarter. In terms of our regulatory capital ratios, our total capital ratio of 15.3% at year-end improved from 14.5% last quarter and remains comfortably above the regulatory minimum of 10.5%. Let me finish up with our outlook. Before going through specific numbers, I want to review some of the larger macro assumptions that underpin our financial guide. We assume a contraction in GDP in 2024, an increase in unemployment to higher than 5%, and broadly, a continuation of uncertain capital markets activity and continued normalization of consumer credit. From an interest rate perspective, we are assuming 4 rate cuts in response to a contracting economy, higher unemployment, and deterioration and normalization in credit performance, with Fed funds rate reaching approximately 4.5% by Q4 2024. Before I summarize 2024 annual guidance, I want to give some high-level thoughts by segment. 2024 will be a transitional year for SoFi, as the tech platform and financial services segments together will drive our growth and increase from 38% of total adjusted net revenue in 2023 to approximately 50% for all of 2024. Specifically, we expect our tech platform and financial services segments, when taken together, to grow 50% or more, with the financial services segment growing approximately 75% year-over-year and tech platform growing approximately 20% year-over-year. We are taking a conservative and pragmatic approach toward our lending segment revenue, expecting to largely maintain it, given our concerns about the 2024 macro environment as it relates to uncertainty on rates, the economy, and industry liquidity. Therefore, we will manage the lending segment revenue to be 92 to 95% of 2023 lending revenue. This very conservative view of lending reflects our choice to limit lending growth below both the much higher level of demand we have had and expect to continue to see in 2024 and the capacity that we have. Fortunately, for us, the scale and profitability we have achieved in our tech platform and financial services segments allows us to intentionally limit growth of our lending businesses in periods of uncertainty while still maintaining an attractive overall growth rate, significant profit, cash generation, and book value growth. Even with our conservative view of the lending business, we expect 50% growth in revenue of tech platform and financial services combined, and to add at least 2.3 million new members in 2024, which represents 30% growth. Within lending, our personal loan originations could be relatively flat or down versus 2023, while student loan originations could grow just modestly, and home loans growth could be correlated with rate decreases. In terms of capital and liquidity, our total risk-based capital ratio improved to 15.3%, up from 14.5% in Q3, demonstrating our ability to effectively manage our balance sheet and capital ratios through growth in GAAP net income, opportunistic capital efficiency transactions, and loan sales. In terms of our lending capacity, we have the ability to originate $18 to $20 billion in loans in 2024, while keeping capital ratios well north of regulatory minimums, and that's based on growth in tangible book value, amortization of existing loans, and previously announced loan sales. To be specific, we expect to generate $300 to $500 million of tangible book value in 2024, which translates to approximately $2.4 to $4 billion of incremental capacity. Second, loans are amortizing or paying down at an annual rate of $8.4 billion. Third, we have our previously announced $2 billion forward flow agreement, in addition to a number of on-the-run loan sale transactions we expect to execute, similar to the sales achieved in Q4. And lastly, we have headroom in our capital ratio. Having said that, we intend to originate less than the $18 to $20 billion in capacity, and this is based on the factors I outlined previously. With that, let me turn to specific guidance. For 2024, even with our conservative view of the lending business at 92 to 95% of 2023 revenue, we expect 50% growth in revenue of tech platform and financial services combined, and to add at least 2.3 million new members, which represents 30% year-over-year growth. We anticipate adjusted EBITDA margins of approximately 20% in the first quarter, ramping to our long-term target margin of 30% by year-end, which equates to a range for 2024 EBITDA of $580 to $590 million. For the full year 2024, we expect expenses under the EBITDA line to be roughly equivalent in aggregate in dollar terms compared to 2023, excluding the 2023 reported goodwill impairment expense. That equates to full-year GAAP net income in the range of $95 to $105 million and GAAP EPS in the range of 7 to 8 cents. We expect growth in tangible book value of $300 to $500 million for the year, and to end the year with a total capital ratio north of 14%. For Q1 2024, we expect to deliver adjusted net revenue of $550 to $560 million, adjusted EBITDA of $110 to $120 million, and GAAP net income in the range of $10 to $20 million. Now let me turn it back to Anthony for thoughts on our medium-term outlook.
Given the number of milestones we have achieved since we transitioned the strategy of the company when I joined 6 years ago, as well as the fact that 2024 will be a transitional year, we thought it would be helpful to provide a longer-term perspective beyond 2024. For the 2023 through 2026 time period, we see 20 to 25% compound annual revenue growth, assuming no meaningful change in the macro environment and no significant new business launches or acquisitions, such as small-medium business checking and savings, or small-medium business lending, a broader asset management business, insurance, a broader credit card portfolio, new technology verticals for the technology platform business, or new geographies. The 20 to 25% compound annual revenue growth from 2023 through 2026 assumes a compound annual growth rate of 50% for financial services revenue, mid-20s% for tech platform revenue, and mid-teens for the lending segment revenue. Simply put, this growth only reflects the benefits of the investments we've made in our existing businesses, paired with continuing to build brand awareness, trust, and adoption by new members, and driving cross-buy from existing members. The earnings power associated with this growth is notable and could drive between 55 cents and 80 cents per share in GAAP EPS in 2026. Moreover, we see 20 to 25% EPS growth beyond 2026, reflecting both the continued growth of the core businesses we just described, plus the added benefit from new business lines launched in the 2024 through 2026 time period that begin to scale and impact beyond 2026. Make no mistake, the long-term opportunity for SoFi remains unchanged, and we continue to believe we are just getting started. There are endless opportunities for investment and growth, and we remain focused on the right types of durable growth for the stage of our company and within the environment in which we operate. In summary, we could not be more proud of the results of SoFi in 2023, or even more encouraged by the prospects ahead of us. We have demonstrated the benefit of having a member-centric approach and being a one-stop shop to help our members get their money right, resulting in having a diversified, high-growth set of revenue streams, multiple cost-efficient sources of capital, a keen focus on underwriting high-quality credit, and a high degree of operating leverage as we scale the business to be the winner that takes most in the digital financial services sector. With that, let's begin the Q&A.
All right, guys. So with that said, we're going to go ahead and close the earnings call now. We're not going to, since the market opens up in less than an hour, we're going to start focusing on, regular stock trading and stuff like that. We're going to skip the Q&A, and start focusing on some other stuff. Let me see, a SoFi earnings. so yeah, we're gonna be day trading the opening bell. We might day trade SoFi some too, but we're already in SoFi, so like I think I'm just gonna let my trades there sit. And put on some music back here, team. All right, so yeah, SoFi is still pumping, almost up to $9 a share. Up a pretty big percentage here, pretty big percentage. You know, let's see if it keeps pumping. SPY still completely flat on the day. Again, my guess is the SPY is just kind of waiting for the market to do anything. Choppiness, you know, you see this previous closing price here. That's the red to green, green to red level. SoFi $9 calls. Good morning, John and all. And then exterior disasters. Wait, what? Okay, Paulo. Aside from good morning, what are you saying? I'm having a hard time understanding. Other than exterior disasters, U.S. economy is hamming. What do you mean by hamming? Like ripping up? Always knew you had a place in your heart for SoFi, John. I've always watched SoFi. We covered SoFi a year ago, and it's one of those positions that we play with pretty regularly. What's up, Anthony? All right, guys. Again, if you haven't already subscribed, hit the notification bell. I appreciate it. Thanks so much. Ham sandwich. I'm assuming he means hard as a blank, which is the ham abbreviation. Like, I'm going to go ham, which is a slang for I'm going to go hard as a blank, you know. Top 3 ham sandwiches in the world right now. Yeah, Twitter is just a place of arguing. I miss poker, bro. Poker, I just don't have the freaking time. SoFi almost up to $9 a share. Let's watch $9. I don't have the time to play poker anymore. I love poker, dude. Poker was my first love, I always say. Like, I've played... Like, poker was what got me... Like, there's a lot of similarities between poker and trading. There really is. They're very similar. Yeah, I'm on SoFi. I mean, I'm in SoFi right now, and yes, I'm up on SoFi. Lucid. Yeah, I think crypto started to dip down. I see Mara dropping down. Lucid is up, but Lucid is such a... Again, the problem with, like... okay. These up-and-coming EV brands are struggles. Like, they're going to struggle to succeed. Most of these up-and-coming EV brands are going to struggle to succeed. That's just kind of how it is. Like, most of them are not good companies. Most of them don't have the consumer base they really ultimately need to, like, have good reactions. They just don't have the consumer base. You know, I think that's something that... Also, guys, again, if you haven't already, check out Topstep. Topstep is a funded account program in futures. If you don't know what that means, so Topstep, what they do is they give you a demo and they test your skill. If you can so what that means is, hold on, team, sorry. So yeah, what Topstep does is they give you a demo and they test your skill. If you could pass the test, the base one, you got to make a 2 to 3 ratio. You got to make 3K in profit without losing over 2K, which is, again, a very reasonable expectation, a very reasonable ratio. If you could do that, they fund you the same amount. The base one's 50K, so if you pass that one, you get 50K in funding with a 90% split. And again, You might be thinking, well, why don't I put the money up myself? There's a few reasons why you probably shouldn't. Like, if it was up to me, do not put the money up yourself, because most day traders lose. And so again, you can put up thousands yourself and almost certainly lose that in day trading. Or you could try a funded account program. If you lose, it's not the end of the world. But if you pass it, you're only out what you pay for the combine. The base one's $50 essentially. So if you lose, you're only out $50. But if you're good enough to pass it, you get $50K in funding with a 90% split. The larger packages, you get up to $150K in funding with a 90% split. They have free funding coaches, tons of great resources. It's just a great way to learn how to day trade with limited risk. And in the futures market, there's no PDT rule. You can day trade essentially the SPY in what's called the S&P E-mini, essentially the QQQ price action in what's called the NASDAQ 100 E-mini. And again, no PDT rule, just the best of both worlds in my opinion, and a great way to learn day trading with limited risk. You can check out the link right here. Card counting? Yeah, I mean, I know how to card count. The problem with card counting, there's a lot of problems with it nowadays in modern age. There really is a lot of problems with card counting. Specifically, the problem with card counting is very simple. Is that casinos know what to look for. So like with card counting, basically, it's people act like it's something that like geniuses do or whatever. And, you know, being smart doesn't hurt, of course. But like casino, okay, so basically what card counting is analyzing how many low cards have come out in the previous few hands, and then using that to predict that high cards are more likely to come, which means that the edge is more pronounced on your side if high cards are more likely to come, right? So when the count is high, meaning high cards are more likely to come out, you have more of an edge. And so what you essentially are supposed to do is you're supposed to bet low, bet small, and then when the count gets high, then you put out larger bets. But the casinos know how to do that. So the casinos know what to look for, and they essentially look for variance in bet sizing. And so if you bet $5, and then all of a sudden you bet $100 and win, the casino is going to look at that and say, hey, this person's card counting. And while card counting is technically not illegal, they can and will boot you out of there. They will kick you out. They will trespass you sometimes as well. So they'll like ban you from ever coming back. And so you can card count and make money, but it's not as easy as the movies make it seem. It's just not that easy. I wish it was. It's just not that easy. Card counting works for sure. Most decks are not changed out every few hands. And so card counting certainly does work. And there certainly are games where they don't change the decks out every few hands. Again, the only real, and there's people who make a living off of it to this day, right? But the only real way to do it, is to travel across the country over and over again. So you have to go to essentially a new casino every weekend. You got to go to a new couple of casinos, and you'll probably go there, get some hands in, get kicked out, go to another one, get some hands in, get kicked out, and then hopefully the edge will be pronounced and you'll be able to make money, and then go to a different group of casinos and do the same thing until you get kicked out, and eventually you're just going to make a lap around the US. That's what you do. But again, it's not as easy as movies make it seem like. If you could go to the same casino over and over and over again and just make a bunch of money and never get kicked out, it would be too easy, you know. And so you could do it, but it's just not that easy anymore, unfortunately. Baccarat actually has the worst odds. You know, that guy Mickey always talks about Baccarat. I don't really know how to play Baccarat, number one. But I'm pretty sure unless you can talk the casino into giving you better odds, Baccarat is not a big edge house, or Baccarat is not a player's edge game where the player has the edge, like something like BJ, you know, where you can card count and have an edge over the house. Baccarat's not that, unfortunately, you know, not unless you can kind of haggle with the casino to get better odds and better conditions, I guess. But even still, it's, you know. Yeah, I know the Phil Ivey controversy where he went to a casino, specifically specified an edge, and the casino agreed to it, and then he went there won millions of dollars, and like the courts were so crooked that they sided with the casino, saying the casino was wronged by Phil Ivey somehow, and that Phil Ivey has to pay them millions of dollars. It's an absolutely ridiculous thing. They agreed to it. Honestly, it's still one of the biggest injustices in the casino world in Vegas. Like, it's one of the biggest injustices. Like, Phil Ivey, like, the casino legit agreed to what he wanted to do, and then when he made a bunch of money doing it, then they sued him and refused to pay him and did all this weird stuff. It's just kind of off. I don't know if it has the worst odds, Justin. I just don't know if it has the best. Again, I haven't tried to card count, Justin, in a while, or even I'm mostly a poker player. Do a majority of them use an automatic shuffler? I'm gonna have to look this up. That sucks. Okay, so I think, okay, so there's a difference. So most casinos, what I'm looking at, have automatic shufflers. But there's a difference between automatic shufflers and continuous shuffle machines. And so, again, automatic shufflers are just something where the dealer doesn't have to shuffle the cards anymore, right? Like, that's pretty... The odds don't change regarding card counting in that situation. Where the odds change are if you have a continuous shuffle machine, meaning after every 1-2 hands, they shuffle the cards, right? That's a completely different thing and makes card counting moot, a moot point. Yeah. It's not, I know, but we're Justin, so there's a difference between, again, so understand what I'm saying, though. There's a difference between there's a difference between an automatic and a continuous shuffle machine. All right? Continuous shuffle machines means after every couple hands, they shuffle the cards. That's different than an automatic shuffler, right? And maybe you understand that, I think, but... So from what I'm looking at, most casinos just do not use, like Caesars doesn't use continuous shuffle machines. Like most casinos don't, from what I'm looking at. But again, I don't know for sure. We have all the big earnings. We've got Microsoft, AMD, Google tomorrow. We've got Meta, Amazon, Apple Thursday. A lot of stuff in between. We got the Fed rate hike decision Wednesday. We've just got a lot of busy stuff. Yeah, I mean, Justin, so again, and it's all good, brother. It's all good. Maybe, again, I hope it's all good. And you might be right. I don't know for sure. What I'm trying to say, though, is there's no difference between a human shuffling and an automatic shuffler and BJ. There's no difference. The difference is not if you have a machine shuffle versus a person. The outcome is going to be the same, odds-wise, in card counting. Where there is a difference is if it's a continuous shuffling machine, which the difference is that with an automatic shuffler, it's the same. You have a shoe, you can still card count, and it's virtually the same as having a person shuffle. What's not the same is if they have a continuous shuffling machine, which means that instead of having a shoe, every hand or two, they automatically reshuffle the cards and then play them on the table. in that instance specifically, card counting is worth it's a waste of time, because obviously you can't count cards if there's no shoe to count them in. But again, from my understanding, and again, maybe I'm wrong, but from my understanding, continuous shuffling machines are not standard right now. That most of the time there's still a shoe. They might have an automatic shuffler for when they do shuffle the cards, but yeah, that's my understanding. But again, I might be wrong. I believe there are some, but I don't think they're standard. Yeah, and it's all good, Justin. Like I said, brother, it's all good, dude. You might be right. I don't know. Yeah, SoFi still trying to bounce at 880s here. We'll see if it continues back up. All right, again, we are going to be day trading on our Topstep funded account today. We are going to be day trading a Topstep funded account. We'll see if this goes well. Check out a stock or two, ACET. ACET, sketchy penny stock, no volume, no liquidity. I'm not touching it. NVAX. I know this one. It's a biotech company, right? Again, very barcoding-like pattern. Downward long-term trend. Looks terrible, to be honest. Was at 12.50s early in the year. Now it's at $4. I don't know enough about it to really say yes or no, but it looks kind of sketchy to me. Yeah, it's a crazy week. Apple pulling back a little bit. Maybe it's time to buy. I don't know. I think this week is a very busy, interesting week. All right, Disney, we're up nicely in Disney too. Boeing, we're actually green in Boeing, which you love to see. Yeah, all good, Justin. Again, you might be right. I don't know, brother. Like I said, I haven't been to the casinos to play in years, so I don't really know. I live in Texas. There's no casinos here, unfortunately. You know, what I'm saying is they might have 5 or 6 deck that you're going to have to divide the count by to play if you're trying to count. But as long as they have a shoe and they keep the decks in the shoe and they don't mess with those for an extended period of time, then you can still count. What do you think about Mara? I think Mara is mostly based off of the price of Bitcoin, which today is up, I believe, right? Yeah, or today it's slightly down, but it's pretty much flat. Yeah. Are there? That's still pretty far away from me. Yeah, I mean, that's still pretty far away. I would go not to play blackjack, though, to play... I would go to play poker. Yeah, I mean, it's still 6 hours away. Like, to drive from where I am to Oklahoma, it's like 6 hours. It's about 400 plus miles. They don't use a shoe. They draw it out of the top of the shuffler. Yeah, that sucks. Lake Charles. Yeah, Lake Charles is closer. It's about 2 hours away. Yeah, Lake Charles is the closest to me. Again, I'm from Louisiana, so when I drive from like BR to Houston, I make that trip. And so they have the big Lake Charles Bridge. It's kind of sketchy bridge, though. Honestly, my wife and I kind of avoid it anytime we come in because the bridge is so sketchy. You know, but it's like 2 hours away. It's not that bad. It's definitely closer than Oklahoma. That's for sure. Alright, guys. We got about 30 minutes left. SoFi's still trying to head up, though. There's the SPY on the right. We're going to try to day trade some in futures today. What happened? What? Where's my funded account? That's weird. Weird. Did Topstep have an issue where funded account program or where funded accounts were closed? It says it's closed, but I didn't break any of the rules or anything. I didn't hit the max loss. Both of mine are gone. That's weird. Anybody know? Yeah, I mean, it's casinos can refuse service to anybody that they want. It doesn't matter what the reason behind it. They can refuse service to anybody. Alright, so there we go. Got this up. Okay, so there's the Express account. So my Express account is there. So I can actually trade it, I think. Let me test this out with micros. So my Express account is there, but weird. It says... Okay, so I can trade it too. Whatever. I guess we're going to take a position in our Express funded account. So we are in 2 contracts of the NASDAQ micro here. Let me get this out of the way. Look at SoFi ripping back up to 9, so I'm gonna put the Q up. Again, the Q is the same thing as the NQ, and I can day trade this on Topstep in futures. No PDT rule. I can buy market, sell market, all that good stuff. No PDT restrictions. Alright guys, so we are in this trade. Hey buddy. Wait, you're going?
Yeah.
Okay. Alright bud, I love you, man.
Bye.
Have a great day, bud. Have a good day, dude. Love you, buddy. Hey, remember, Yeah, just leave that there. It's fine. Just put that up. Here, stop. Here, I need that. Put it up. Yeah, man. Come on, dude. All right, bro. I love you, buddy. Have a good day at school, man. All right. All right, so we're in this trade. Alright, so sorry. Yeah, this isn't a practice account though. This is these are XFA accounts, and they're tradable on Quant Tower, but in the actual dashboard, for whatever reason, they're under closed, which doesn't make any sense. You know, both of them are under closed, so it looks like they just kind of randomly closed it. I'm not sure why. Wait. Yeah, that's not what it was. Let's see. All right, guys. Let's see. All right, guys. All right, so we're now green on this one. All right, let's see. I gotta copy this. All right, so we're now green here. I don't know whether I want to take profit or not. I guess I will in just the micros account. We're gonna try to use micros to build up a cushion here. Take half off, just lock that in. And then, sorry, I gotta copy and paste the account name, so bear with me, team. Wish it let me. Oh well. Alright, so we got a nice little rip up. Let's see, this is the second one. Alright, so we got a nice little bounce up here. I'll probably take profit and just lock that in. Build up a cushion on the day first is what we're trying to do. And again, this is our funded account, our express funded account. Looks like a lot of people are having the same issue. Okay, yeah, I opened mine too. It's all good. Yeah, it looks like they accidentally closed some of my I mean, they didn't close it. Like, I'm trading on my Express account. If you don't believe me, just to clarify this. Like, look. Like, look. Here's my Express. You can see EXPR at the top, right? So this is my Express account. My actual funded account, you know. They, for whatever reason, they accidentally closed it down. And that's all good. You know, I think they were updating some stuff, so... And again, if you haven't already, if you want to join them with me and try to get funded on Topstep, again, here's the link. Great way to help support your boy here in this channel. We got a very busy week ahead, and so it might be a fun week to trade on these combines. You can check out the link right there. Again, there's no PDT in futures. You can day trade short, all that good stuff. We might buy this again and buy a little dip. We're going to add one contract here and then wait a little while and then add another one. But we got a cushion on the day. So we never really got a chance to add some more to it. Alright, SoFi dipping down to 870s, guys. 870s on SoFi. So SoFi is starting to fall down a little bit here. Let me go ahead and add to this. Let's see if the Q. So now the Q is right around the 200 EMA volume weighted average price spot here. What's up, Carlos? Are you bullish on Tesla long term? I like Tesla long term, but again, that's just me personally. I mean, do whatever you guys got to do. I'm not going to tell you guys what to do here. That's your own decision you got to make there for, you know, regarding Tesla, you know. Oh man, we're gonna dip. We'll see if it's just choppiness. You know, you can see the Q right at the 200 EMA volume weighted average price level. It is the day before big earnings, the day before economic reports, the jobs report tomorrow. You just got a lot of stuff going on. Alright, so we got a little bit of a bounce. Why don't you use order entry window to put in limit orders? Because I don't need to. I mean, I might be able to get slightly a better fill. But with micros, we've got such small size here on these trades that like we're trying to take longer term trades in early pre-market. At the opening bell in 15 minutes, we might do a little bit more. But yeah, I don't think we have any economic reports today either. Let me see. So yeah, today is yeah, we don't have anything going on. We got the Dallas Fed, PCE, and Manufacturing Business Index, but none of it's really relevant. It's very slow. Tomorrow is when the big stuff starts. Specifically, we got European GDP, we got CB Consumer Confidence, the JOLTS report, all that good stuff for the opening bell in 15 minutes. We'll see how that goes. Alright, so now we're dipping down a little bit. I'm just going to go ahead and take... This is choppiness. We're just going to get ready to trade the opening bell. We're basically flat today. We haven't really gotten too much big stuff. Alright guys, so again the Q. Oh, earnings after closing bell tomorrow. Yeah, we got big boys tomorrow. We don't have any other economic reports today. Yeah, we don't have any other stuff, like big stuff like that today. Yeah, so yeah, we don't have any. All the big stuff is basically done. I buy some stocks. Like, I'm in SoFi. We're green in it, you know. What's up, Gabe? Intel is dropping. Didn't Intel have earnings last week? Yeah, and they're down from it big. See, the Q is just flat, unfortunately. Alright, so we're now breaking these lows of pre-market right now. So we just broke the lows of pre-market on the NASDAQ here. We're still green on the day, I believe, but we are starting to push down some. Yeah, so the Q is still technically green on the day, but not super green. You know, we're pretty close to the previous closing price, that red to green level. Tesla's still pretty green. Apple is another one that is slightly red. Microsoft, pretty green though. But yeah, there's a pretty large breakdown here. We'll see if it continues down or what happens. Thoughts on Airbnb? I'm skeptical of Airbnb's future for a few different reasons. Again, I've talked about this before, but one of the main reasons I'm skeptical of Airbnb's future is this. We'll try shorting this. One of the main reasons I'm skeptical of Airbnb's future is this. Airbnb charges such obscene fees, and I think the internet, like, okay, so I'm trying to think of the easiest way to explain why I'm bearish on Airbnb. The internet is becoming such a diverse thing in terms of forums, message boards, posting. You know, basically on almost every software application, you can make a post, right? And so you do not necessarily need to go through Airbnb anymore if you want to find a vacation rental. You don't need to go through them because you're going to be paying freaking 50% more to go through Airbnb. And so over time, I think one of the things that we're going to see in these areas is we're going to start to see more people reaching out on basic social media posts instead of Airbnb. And I think that's bad. All right, so we're losing on this trade again. Just kind of we're getting caught in the chop. But yeah, I think that's bad because I think that like people are going to use Facebook. They're going to use Instagram. They're going to use other places like that to promote their vacation short-term rentals, and they're going to avoid the fees in that way. They're going to get around the fees by just going through basic social media. And I think social media is growing to a point where it's going to involve that type of stuff already. And I think that's bad for basic websites like Airbnb and applications because I think people are not going to need to use them anymore. They're going to be able to get rid of the fees, avoid the fees by just going through regular social media posts instead. And I think that's something that we're already seeing. And I think that's something that we're going to continue to see into the future. Yeah, I mean, we're just getting caught in the chop. I guess I'll cover this. Like, we're only down like $30 today, though, so we just been playing micros. Love you. Have a good day at school. And so, yeah. SoFi fell some, but it bounced right back. But, yeah, that's something that I think is going to be... I think that's very clear that, like, Airbnb is too expensive. Like, the problem is how they try to mask how expensive it is. Like, the problem is, like, you go sign up for a home in Airbnb and say it's like, yeah, this home's $250 a day. Right, so you're like, okay, cool. I stay for 4 days. I'm spending $1,000. Great. You go to check out. You're really gonna be paying $2,000. You're gonna be paying 100% more than what it advertised the price as because of cleaning, because of all this different stuff that they're gonna tack on at the end of it, just to kind of trick you into buying it, and then they're gonna hope that you buy it anyway, right? And like that is something that you see a lot with Airbnbs, and I think over time you're gonna see landlords and reach out to people through basic social media instead of Airbnb and say, yo, you could pay X amount here. You know, you instead of paying $2,000 for this through Airbnb, you can pay $1,300 now and just pay me directly. You know, insure. The only hiccup in that is that it's not going to be insured. It's not going to be protected as much through Airbnb, but it's just going to save everybody money. And I think that's something that you're going to see happen more and more. I think competition is going to open up for Airbnb in that way. Do you feel the same about Expedia? Well, the fees that Expedia takes out relative to the hotel is much, much lower, Larry. There's a huge difference between Expedia and Airbnb. Airbnb charges almost 100% premium just to use them versus what it's advertised in terms of rent, right? Expedia is just a resourcing software that allows you to look up stuff, and they might charge you, what, like 5 to 10% on top of what you're paying for those hotels. But it's nothing like Airbnb's 100% premium, you know. And again, I think that's going to make it hard for Airbnb. You know, again, maybe I'm wrong. I could be wrong. This is just my own thoughts on it. I might be wrong here. You know, I really might be wrong. Again, I don't know. All I'm saying is that the fees are obscene on Airbnb. Airbnb's up though. I mean, hey, it's up to $150 a share. So I mean, maybe I'm wrong. I could be wrong. Sure. Yeah, Craigslist, Facebook, Instagram. Like you're gonna get a lot of people renting straight off of those sites instead of Airbnb now. All right, guys. Hey, we got 7 minutes. The issue is that going through Airbnb is safer for homeowners too. Sure, 100%. You don't have insurance and stuff like that. That's all I was saying. Like that is gonna be always a hiccup in it. But I think they're gonna open up competition. Like I think you're gonna have competition. I think people are gonna find other places to go. You know. Yeah, SoFi killed it with their results. What a big bounce back, though. So we're back up to the 200 EMA volume weighted average price on the Q. All right. All right, guys, you ready? All right, so SoFi bounced it up a little bit, very flat open here. And the question is the market choppy and sideways today? Again, we got a lot of stuff coming out tomorrow, specifically Wednesday, Thursday. And so the question is, what does the market look like? Yeah, it's fair. Cleaning fees, the owner's charges. Well, yeah, for sure. 100%, Justin. All right, so again, SoFi still rip it up. It's at 880s, almost 890s. Trying to test $9 a share. All right, we got the opening bell in 2.5 minutes. All right, guys. NVIDIA VWAP. All right, team. Whew. All right. Very choppy. Look at the 200 EMA volume weighted average price rejection. I mean, this is why we watch it. Is because look at this. It rejects literally right off of the VWAP 200 EMA level. Like the 200 EMA level is exactly where it rejects. Microsoft starting to dip down some. Alright guys, here we go. We got the opening bell. I had a call option, so you're probably sitting pretty right now. Alright guys, we got less than a minute. Less than a minute. Alright. Hey, congrats, Corey. Nice, bro. Alright, so we got a little pop-up. It's too flat to trade. SoFi's still ripping up, though, so that's nice to see. You love to see it. Let's see if we can keep it up. Again, we got 5 seconds. So here's the opening bell, guys. Let's see if we get something good. Alright, so we got a little rejection here in the micro NASDAQ. We're going to let things try to play out first. So we're going to try to let things play out first. We'll see if it holds. Alright. Alright, so we got a little dip here. Let's see if we continue down. Again, I gotta let things like hold first. I don't want to trade too early in the open. It's just too early. Alright, so we're flushing down some. So we are starting to break down. Maybe we'll take a position here. SoFi trying to bounce at the volume weighted average price. Microsoft breaking all the way down. Ray, if you're having any problems, they had rhythmic issues, so reach out to Topstep support on their website if you're having issues. I had my funded account programs disappear. And so my funded account programs just disappeared. And so I had to reach out to support, and they said that don't worry, they're going to get it fixed. All right, SoFi still moving up here, guys. SoFi testing $9 a share. I'm going to short this. And then maybe add to a position here if we get a good enough spot. Alright, so there's a breakdown and then a bounce. It's a little choppy. We're trading a little early. Yeah, this looks bad. So, again, we're only down $75. I should start trading micros more. But yeah, I would reach out to them if you're having trouble. SoFi, guys, over 9s. Wow. SoFi holding really well. Boeing, we're up nicely too. Citigroup, we're green. Delta, we're almost green. Disney, we're green too. All right. Again, we are almost We gotta wait for this range to break. Let's draw the range. It's too choppy. We've been in this range for the last 30 minutes or so. I think the market might be flat today too, guys, because I think we have a lot of economic reports coming out. Yeah, I would reach out to them, Ray. All right. Tesla's starting to move up a little bit too. SoFi finally dipping down a little bit. Still at $9 a share. Microsoft starting to bounce back a little bit. The Q moving back up too. Just such a flat day. Q starting to look green though. I want to buy the Q. And again, we'll see if it pushes over the 200 EMA and holds first. We've just gotten chopped out of all of our positions today, so. It's been a really rough couple days. I think the whole market's kind of waiting for economic reports to drop. One thing I should have been using is chart prime a little bit more. Honestly, chart prime is still pretty impressive, dude. Again, just to show you guys chart prime. It's a trading view service you can use in stocks, crypto, forex, futures. Like, look at all this today. It's genuinely impressive. Like, let's back test it really quick. Again, strong bear signal here, beautiful breakdown. Look at the buy signal way down here. So again, I don't know if y'all can see that on the screen. Yeah, y'all can. So look at the buy signal way down here, and then look at the big green action that you got followed through. Look at the sell signal here. Look strong, boom. Buy signal, boom. Strong signal, boom. Strong buy signal, rip. Strong sell signal, breakdown. This one was wrong. This one was right, though. Look at those breakdowns here. Genuinely impressive. I think there was like 1 or 2 wrong out of like 8. So genuinely impressive. And again, I can use this on any time frame. I could look at the E-mini, the NASDAQ. I can't guarantee you're going to make money. They're a sponsor of mine as well. But back test it. Like, it's pretty impressive. This one was wrong. This one was right. 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 This one was wrong. This one was right. So out of 1, 2, 3, 4, 5, 6, 7, 8. 2 out of 8. So 75% worked based off of the last day. And again, I can't guarantee you're going to make money. Nobody can. But again, they are a sponsor of mine. There's the link. Also, guys, remember, I am terrible at this stuff and have no freaking idea what I'm talking about. Good luck. Remember, I have no idea what I'm talking about. I am absolutely terrible at all of this stuff. All right? Don't copy me. I have no idea what I'm talking about. I might be wildly wrong about anything and everything I say. Remember. But again, if you want to check out Chart Prime, I'll put the link up. Great way to help support your boy here in this channel. There is the Q rip it up. So there's the Q making big moves. And yeah, if you want to try out Chart Prime, there's the link. They're a sponsor of mine. I'm biased, of course. The Q rip it up big. We see the range break here. We'll look for a pullback now if we can. Try to longer term trade it maybe. John, thanks for covering my downside again this week. Hey, all good, Corey. Listen, I'm here to help, bro. Listen, I'm here to help, dude. That's what we're here for, you know. We're in SoFi. SoFi is doing lovely today. We're actually green at equities again. Like, look, here's my equities positions today. We are up a whopping $130 in equities. We'll take it. Stocks are doing well. Q just flying up to almost 425s. Looks good. Q up to 425s right now. Microsoft bouncing back too. Let's see what Apple's doing. Apple trying to make some moves. What's falling so hard right now? Is it Tesla? No, it's not Tesla. Tesla dipping down some. It's not Disney. It's not Etsy. I guess everything's starting to dip a little bit, but why is ARM up so much? I'm in ARM. Oh. AMD. Yeah, AMD dipped a lot this morning. It's finally starting to bounce back some too. We'll see if it holds. Big rip though. Again, I need a small pullback. We had this range break. Finally starting to get a dip. I think I need to just be patient and wait for like a larger pullback. Let's take one contract there. Look to add a little bit more if we fall a little bit more. Might not get a chance to add to it though. We're trying to break highs. We might have to move over from micros to regular E-mini, I think. Yeah, I'm looking at PALI. It doesn't look that good. I mean, it's big percentage moves for a penny stock, but it's just not what I mess with. Super risky, I think, in my opinion. But again, that's just me. Y'all do y'all's thing. I'm not mad. You know. Yeah, we're gonna have to switch to the regular NASDAQ after this. The micros are just too tight. We got a nice little bounce. Such a small trade though. I'm gonna buy a little bit more of this. Take 2 contracts here. But again, after this, we're gonna have to switch to the NASDAQ. We're just not getting enough out of this 2 basic micros. So this is the difference. In futures, there's micros, which are very small positions. And then there's regulars. Micros move like this, where we're up or down $5, $10, very small. Regulars move a lot faster. And so we're taking small positions here. But again, I'm convinced the market might be choppy today because of all the big economic data and earnings that drop tomorrow, the next day, and the next day. So when you're used to trading much larger, this is just too small, I think. All right, we took half off just to protect the trade, get a little bit of cushion in there, because we are going to move up to regulars after this. All right, so we just went ahead and got out. So yeah, we're basically flat on the day. I'm going to pull up regular NASDAQ position. Here's the regular NASDAQ. Now with this, we have to be way more careful. Way more careful. Meta looks strong. Yeah, whoa, Meta up to almost $400. So Meta does look very strong. Again, y'all, don't forget to subscribe, team. Hit the notification bell. We appreciate the love. Thanks so much. Alright, so we got a little move up. Choppiness, though. Microsoft is really what is telling the story of the day. If we look at Microsoft opened up pretty red. Bounced all the way back up to very green on the day. I guess it depends on what it does. It's trying to go up. Nasdaq's still moving here, team. It's trying to move. And again, I'm going to put this up again because, you know, I need to remember I am terrible at this stuff and have no idea what I'm talking about. Understand this rule: hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, the results do not represent actual trading. You know, all this other stuff. Make sure to read this, understand this. This is a funded account program in futures. We're also trading stocks, though. And again, here's our equities portfolio. We're only up about $100 in equities today. About $94 because some of our positions have dipped down some. We're still green, though. And that's all that matters is we're still green in equities. I'm going to go ahead and buy this dip in the regular NASDAQ. Microsoft's right at the 200 EMA. See if we can get a quick little pop. I don't want to add more than this. I'm just going to take one contract here. There we go. Alright, so we just made another 40 or 50 bucks. We're basically completely flat on the day now, scalping this. I might add a little bit more. I didn't get a chance to. Watching Microsoft bounce at the 200 EMA is the reason we're looking at this. I'm going to buy this here. See if we can get another little quick pop back up. Alright, we made another little 60 bucks. We are now green, scalping this move. Pretty green. And you can see how much faster the NASDAQ moves relative to like the micro. So scalping it again. We're now green in our express funded account on Topstep, in our funded account. Let's see if it continues. Meta testing highs again. Q pulling all the way back down. All the way back down. I was going to buy that dip. I just didn't. Meta looking very strong today, guys. Meta. Nvidia's been looking pretty strong too. I'm gonna buy this. Again, we've got a small cushion on the day. Kind of flat though still. And we'll add a little bit to this. See if we can get a fixed average here. Alright, we took half off, locked that in, protected ourselves. Gonna give this a little bit more time to run. Alright, we just made another 100 bucks or so. We are now up a cool 130 bucks or so on our express funded account. Again, what we're watching is Microsoft a lot. You know, this is one of the most common patterns I see in charts. One of the most common patterns. Like, I see this pattern very often. And again, we're going to break it down really quick right now. Let's talk about it. Okay, so first things first, you get an opening cup and handle. So the first thing you're looking for is a cup-like pattern like this. You can see kind of a cup-like pattern. You can see the 200 EMA and the VWAP level above us. You're looking for a cup-like pattern, a break over the 200 EMA and the volume-weighted average price. And then you're looking for a small dip to that 200 EMA or the volume-weighted average price level. This dip is where you're trying to buy it, and then you're looking for a follow-through bounce. Now, again, this can only really happen when the volume and liquidity is solid, but if you can be patient and just wait for that, very powerful system, very powerful strategy. You got to wait for it. You can't just kind of throw it at like darts at a dartboard, but it can work really well. I can't guarantee it's going to work. Nobody can. You got to have the right conditions and all that good stuff. But yeah, check it out. Pretty solid little system and strategy. Scared to touch futures. Yeah, I don't blame you. All right. Let's see what we got here. All right, so we're now dipping in the NASDAQ. I don't know if I want to buy the Q anymore. I think I've been testing it a little bit too much. Like, we've been playing with that a little bit too much. Alright, so yeah, it looks like playing with the Q is done. Again, I'm glad I didn't buy it again. All right, guys. There we go. Look at Apple. Yeah, I'm looking at Apple, Meta, Microsoft. Oof. Yeah, you're right, though. Look at Apple. Apple just dumping down here. It's what's dragging the NASDAQ down. Look at Apple all the way down to 189.75. This has to be catalyst related. And remember, Apple has earnings. I wonder why Apple's down this much. This looks catalyst related, but I'm not sure why. But we're, again, I think it's catalyst related. Yeah, oil. Yeah, I feel you. Yeah, Apple down a lot. I mean, I'm still green on Apple. My average price in Apple's 182s, and it's at basically 190. But still, SoFi started to move back up. Microsoft's still churning higher here. So, like, look at Microsoft churn. Again, we're up small on the day in our funded account program. And again, what this is, again, this is a funded account program on Topstep. And again, what I've basically been doing, like, here's my funded account program today. We are green slightly. We got about a 1.75 to 1 win-loss ratio, about a 1.75 to 1. So we fought our way back. And again, what they do is they give you a demo and they test your skill. If you can pass the test in the demo account, then they fund you with an express funded account or a live funded account. Once you're funded, you know, you keep 90% of your profit once you're funded. You get to keep your first 10K in profit as well. And so basically, once you're funded, if you make 10K, you get to keep 9,000 of that. They keep 1,000 since they're funding you that money, and there's free funding coaches, tons of great resources, and ultimately it's just a cheaper way to get started in day trading. There's no PDT or in futures, and so if you want to day trade stocks, you're going to need 25 grand and all this big stuff in a margin account, and there's the PDT restrictions, and it's just very difficult. You need a lot of money to do it. The futures market is less so like that. These funded account programs are allowed, and again, a lot of people can try to get funded, built up enough profit, withdraw from them, and then start their own account if they want to, and all that good stuff. But again, the big thing in futures, you can day trade the Q, the price action, and so I'm watching large cap stocks, and we're day trading the NASDAQ, which is like the NASDAQ 100. It's the 100 largest stocks in the world put into an index fund. And so we're watching Microsoft, we're watching Apple, and then we're letting those moves indicate what kind of trades we take in futures. It just makes sense. It's something that we do a lot. Although, again, Topstep is a sponsor of mine. I'm biased, of course, because they pay me money. And I can't guarantee anything. You always want to reach out to them, but there's the link in chat. Again, the base one's only $49. Just as a test of skill, it's a great way to learn, in my opinion. Look at Microsoft, though, guys. Look at Microsoft. Up to 409s here, 409s. Let's see if it drags the NASDAQ up with us. But, yeah, certainly interesting. Again, Microsoft at 409s. Still breaking highs. The Q is very sideways and very flat, so y'all just be careful. Still trying to ride up. Look at Microsoft. Man. Microsoft tapped 409s. What's the lifetime high for Microsoft? Ooh, 409. Microsoft breaking lifetime highs today. Lifetime high breaks for Microsoft. Crazy. I'm going to take a picture of this. Yeah, Microsoft just broke lifetime highs. That's impressive. 409 is the new lifetime highs. And what's interesting is the Q's not really following it because Apple's so weak. SoFi's still ripping up though. SoFi looks pretty solid on the day. Yeah, I mean, Randy, no matter what, people are going to complain. If the music is too low, they're going to say it's too low. If the music is too high, they're going to say it's too high. We can't please everybody. I mean, we're about to close it down anyway. But yeah, I'm going to get out of here, guys. We'll be back tomorrow. Tomorrow's the busiest day of markets. The busiest day of markets is tomorrow. And so, again, if you haven't already, hit the subscribe button, hit the notification bell. I appreciate the love. Thanks so much. Again, check out Topstep if you want. Check out Chart Prime. Chart Prime, again, surprisingly accurate. I can't guarantee anything, of course, but, like, genuinely impressive if you try them out and test it out. You can try it out with any symbol, too. I've never tried, like, oil. Oil's one. I know a lot of people use it for, like, crypto. But you can check out the link for all the sponsors in the description if you haven't already. Where's oil? Let's see, CL, crude oil futures. Yeah, we do have big oil dropping. Yeah, check it out. Check out Chart Prime and oil. Oil has been surprisingly accurate too. Again, look at oil. So here's oil's chart. Here's CL, right? Just to back test it ourselves. Like, I can't fake this either, you know? Look. Strong signal. Nice little rip. Just to show you this one. Yeah, let me show you. Look at the strong signal here. Beautiful rip up. Sell signal there. Beautiful breakdown. This is a 5-minute chart too, so this is a longer term chart. Buy signal here. Beautiful rip. This one was wrong. Strong buy signal there. Nice little gap up. Sell signal there worked. This one was wrong, but this sell signal worked. This one worked. This one worked. This one worked. This one worked. And so again, impressive. Impressive. Again, check out the links in the description if you want. They're sponsors, of course. I'm biased. I have no idea what I'm talking about. I'm all wildly wrong about everything I say, but good luck. I love you all. Y'all be safe. I'll be back tomorrow. Tomorrow will be very, very, very busy, starting with JOLTS report in the morning, big earnings in the evening, Fed rate hike, non-farm employment on Wednesday. Thursday, we've got Amazon, Apple, Meta earnings. We've got jobless claims, a bunch of stuff this week. It's so every day this week is busy. I'll be busy all week. Y'all be safe. Love you all. Y'all be good.